new chapter, that is non-resident. So if you are verifying the CMA, ICMI study material, it is included in the assessment of various entities only, individual, including non-resident assessment. Okay. Separately, we can discuss as forming part of a international taxation chapter. So straight away, what are the concepts we are going to learn in this chapter? In first phase, I presented the total topics. But okay, what are the topics we are going to cover as an important or in this session? First, we can cover the residential status, you know already in intermediate level, but we can add some more concepts in the residential status. Next, section 5 is nothing but scope of total income, these two, and most important provisions, presumptive taxation provisions for non-resident. So always they are giving this type of questions only, presumptive taxation provision for non-resident. What about resident? Already covered in which chapter? PCBP. Already covered in PCBP. Now, so next section I want to tell you 44DA, royalty income, if anything is there for non-resident, what is that? Tax liability and how we are going to calculate. Next, 44C is deduction of head office expenses in case of non-resident. That also we can cover. And I want to tell you taxation of NRI. And next, computation of capital gain in case of non-resident. First, I want to cover these concepts. If time permits, we can discuss the few more also. Like next, what is that? If time permits, I will take the tax rates for the non-resident. So remaining things, what about the TDS provisions related to non-resident? So maybe you will get one MCQ or any question also. But if you haven't time, yes, you can refer the non-resident related TDS provision. 6 or 7 sections are there. But if you ignore also, nothing will be impacted on your total marks. But 1 or 2 MCQs you can expect. But if they are given, that is your bad luck only. So that's why I will try to cover the section 6.5, presumptive taxation, 44DA and 44C, and tax rate for certain incomes related to non-resident also I will try to cover. Next, taxation of NRI and how to calculate capital gain in case of non-resident, and you can try on your own TDS rate. But in handwritten notes, I provided the summary. In your free time, you can refer that also. Straight away, I want to start the discussion with what is that concept? Residential status. Within few minutes, I want to end this topic of residential status because you know already. So now I want to calculate the residential status of all the persons. First, how to calculate one income, how to classify one income as an Indian income and foreign income. First, if income earned or accrued in India or received in India, that income can be called as what? Indian income. If any income accrued or earned or received in India, that income is called as Indian income. Other than Indian income, that is called as foreign income. Accrued or earned, one and the same. Next. So this thing already you know. Earning is connected to India. Received also connected to India. Indian income. Earning connected to India. That's why Indian income. Here, received connected to India. That's why Indian income. Yes, both the things are outside India. So that's why it isn't what? Foreign income. But in India, if you are a resident and ordinary resident, what is that? Income is taxable in your hands, entire global income. That is an Indian income as well as foreign income. But if you are a non-resident, yes, definitely only one income is taxable in the hands of non-resident in India. What is that income? Indian income. So coming to the tax liability or taxable income, which residential status is better for that assessee? Non-resident only. Because on Indian income only you are required to pay the tax. Unfortunately, you are a resident and ordinary resident. What are the types of incomes are taxable in your hands? Entire global income. Now, example I will take. Indian income is there 100 lakh. Foreign income is there 60 lakh in your hands. Suppose if you are a resident and ordinary resident, both the things will be what? Taxable. Then your total income is how much? 160 lakh. Both the things will be taxed in India. Global income will be taxed in India. Next, non-resident. If you are a non-resident, only Indian income will taxable. Not taxable with respect to the what? Foreign income. What is your total income? 100 lakh. That means here total income is depending upon what? Residential status. So that's why at any time you are filing the return of income or you are computed the total income, first you need to ask the one question, whether you are a resident or non-resident. Remember, scope of total income, nothing but what is the extent of your total income, that is section 5. It is always depending upon what? Residential status, that is section 6. So I think in your intermediate level also, before calculating the 5 heads related income, first you need to determine the residential status. Based on residential status only, we can say what is your total income. Now, next point. Sir, in person definition, we have an individual, HUF. Next one, a company. Next, others. Others means here you can read all the things, AOP, BOI, AJP, partnership firm, all others we can. But first, coming to the individual residential status, many students are ignoring this residential status concept. You can't ignore while they are asking the DTAA questions. In all the questions, they are mentioning the resident and ordinary resident. But in recent trends, you need to find out the residential status. Then you have to give the relief. Normally, unilateral relief or bilateral relief are mostly available for whom? Resident and ordinary resident. That status you have to compute based on the data given in the question. If they are given directly, no issue. But in recent exam trends, they are asking the residential status. After calculating the residential status only, you need to solve DTAA question. That's why individual residential status also important only. Now, if you finding the residential status of individual, how many outputs you will get my answers? Either resident, non-resident or deemed resident. If you got an answer as a resident, then you have to find out the what ma ordinary status. Resident and ordinary resident or resident but not ordinary resident. Again I am saying, okay, I will tell you how to calculate the residential status. First, how many answers you will get ma? 3. First, non-resident na enough, deemed resident na enough. But if you got an answer as a resident, you have to find out the ordinary status also. HUF residential status, first calculate resident or non-resident. If you got an answer as a resident, then you have to find out the what ma? Ordinary status. That means individual, for individual ordinary status is there. Next, for whom ordinary status is there ma? HUF also. Company residential status simple. Please calculate resident or non-resident. Enough. No need to calculate what ma? Ordinary status. Others also, can you give me some examples of others ma? Partnership firm, LLP, AOP, BOI, cooperative society or AJP, local authority, etc. For all the things, please try to calculate resident or non-resident. No need to calculate what ma? Ordinary status. No need to calculate ordinary status. Are you clear up to now? Now, first I want to start with the residential status of an individual. Sir, first I will tell you that what is the format we are going to follow. Then after I will tell you condition. So first our agenda to calculate whether he is a resident or non-resident. So for calculating one individual as a resident or non-resident, we have to check the what is the data ma? Number of days stay in India. Based on number of days stay in India, based on that only we can calculate the residential status of an individual. So for calculating that whether he is a resident or non-resident, we have to use the basic conditions 2, basic condition 1, basic condition 2. Any basic condition is satisfied also, we can say that person as a resident, otherwise non-resident. Now, both the conditions satisfied, answer ma resident. For Mr. B, one condition satisfied, no problem, resident only. So one condition only satisfied, answer is resident. Here, both the conditions are not satisfied. That's why we can say it as what ma? Non-resident. Then issue closed. Directly we can say he is a non-resident only. But we got an answer as a resident. Then further we have to classify that person as an ordinary resident or not ordinary resident. How to classify ma? Yes, for that classification, we have to use the additional condition 1 and additional condition 2. Conjunction between the basic conditions is or, conjunction between the additional conditions is and. So now, both the additional conditions satisfied. Can you tell me what is that answer we can get here? Resident and ordinary resident. Here one only satisfied, answer not ordinary resident. Here also one only satisfied. What is that answer ma? But not ordinary resident. If he is a non-resident, no need to classify whether he is an ordinary, not ordinary. For calculating whether he is a resident or non-resident, what are the conditions we can use ma? Basic condition 1 or basic condition 2. Next, if you want to calculate the ordinary status, we have to use the additional condition 1 and additional condition 2. Clear? Resident but not ordinary resident. Now, I want to start the discussion directly with the what are the basic conditions, what are the additional conditions. How many basic conditions? 2. Conjunction or. What are the additional conditions? How many are there ma? 2. What is the conjunction? And. Now, basic conditions are mentioned in the section 6 subsection 1. basic condition 1 and basic condition 2. Remember, during the relevant previous year, for which year we want to calculate the total income? Relevant previous. For that year only we want to find out the residential status. Sir, 1 year residential status, if you calculate it, it is fixed forever. No, every year we have to compute the residential status. Now, during the relevant previous year, please check whether the individual staying for the 182 days or more. That means for checking the B1, how many years data is required? 1 year data only required. What is that? Relevant previous year data. If you given, yes, that's enough. What is that number of days? 182 days or more. Now, second or conjunction. Now, we have to check the basic condition 2. Remember, for checking the basic condition 2, first check during the relevant previous year whether this fellow staying in India for the 60 days or more. That means during the relevant previous year, you have to check whether he is he is staying in India 60 days or what more. In addition to that, one more condition you have to check during the 4 years immediately preceding to the relevant previous year. How many years? 4 years. Immediately preceding to the relevant previous year. Immediately means yes. Definitely starting from 23-24, 22-23, 21-22, 20-21. All these 4 years, please calculate how many days he stayed in India. If we stayed in India during that 4 years immediately preceding to the relevant previous year, 365 or more, that condition also satisfied. For checking B2, how many years data is required? 5 years. Including relevant previous year, we need 5 years data. Are you clear? Anyone is satisfied, then is an resident. Further, we have to classify whether he is an ordinary resident or not. So, additional conditions are mentioned in the section 6, subsection 6. Basic conditions mentioned in section 6, subsection 1. Now, A1, additional condition 1. It is very simple, but many intermediate students are getting confusion with regarding the additional condition 1. Immediately preceding to the relevant previous year, please check 10 years. How many years? 10 years. Can you tell me what is that relevant previous year for our exams? 24, 25. So 1 year, 2, 3, 4, 5, 6, 7, 8, 9, 10 years. Out of every year, you have to find out the residential status. Immediately preceding to the relevant previous year, how many years we have to check? 10 years. For the 10 years, please verify the residential status. How to calculate the residential status of every year? By using the basic condition 1 and basic condition 2. If you applied for every year, you will get the residential status, whether he is a resident or non-resident. At least you got an answer as a resident for how many years? 2 years. Then additional condition 1 is satisfied. Ordinary means last year's performance is required. Last year's performance here, at least 2 years out of the last 10 years immediately preceding to the relevant previous year. If you got answer as a resident for at least how many years? 2 years. Then additional condition 1 is satisfied. That means for the last 10 years, apply B1 or B2. B1 or B2. If anything satisfied also, for that he is a resident only. Second condition, yes, we have to check the data for the immediately preceding 7 years. A1 related we have to apply for how many years? 10 years. Next you have to apply for 7 years. In that 7 years, if he stayed in India for 730 days or more, then A2 also satisfied. What do you mean by the A2? Additional condition 2. Both the additional condition if satisfied, answer is ordinary resident. Otherwise, not ordinary resident. So now, how many years data is required for A1? 10 years data. 10 years only. This year not required. This year not required, but they will give you. But next, in order to check the A2, how many years data is required? 7 years data is required. Definitely in exam, they will try to provide the total complete information only, but we have to identify for what purpose they are given. So this isn't generally we have to apply. If I am saying, if I am given my details about last 10 years staying in India details, you can calculate easily by using B1, B2, A1, A2. You can tell my residential status generally. But I will tell you some exceptional cases. This is only important at final level. Yes, exceptional cases. In these exceptional cases, we don't want to follow the general ESMA provisions. We have to follow some exceptional provisions. Shall we start that exceptional provision classification? No. First, how many exceptions are there, ma? How many? Two only. How many exceptions are there? Only two. First exception I am reading, just listen. Indian citizen. This exception is applicable for whom? Indian citizen who leaves India or who left India during which year? Relevant previous year. Suppose if any Indian citizen left India during the relevant previous year for these two purposes. What are the two purposes? Purpose of employment outside India as a crew member of what? Indian ship. As a crew member of what? Indian ship. Then you have to calculate the residential status in exceptional way. Generally, what are the conditions are applicable? Basic condition 1 or basic condition 2. Here, just apply basic condition 1. Basic condition 2 is not applicable. So, when exception 1 is applicable for Indian citizen who left India for the purpose of employment outside India or crew member of Indian ship in which year he left India during the relevant previous year. 2 years back, one person left India, sir. Now this exception is applicable. No. During the relevant previous year, he left India for this purpose. That fellow must be Indian citizen. Sir, B1 if satisfied, then answer is what? Resident. If he is a resident, we have to find out the ordinary status by using that what? Additional condition 1 and additional condition 2. If B1 is not satisfied, then answer is what? Non-resident. Clear? So, not satisfied means many students are trying to apply B2. That is not correct. In these exceptional cases, we have to follow this rule. Clear? Now, second one. Second exception is applicable for the Indian citizen and person of Indian origin. Do you know what do you mean by the person of Indian origin? Example. Okay, if any person asking, sir, what is your native place? What is your origin place? Means definitely you can say your parents' birthplace or grandparents' birthplace. Similarly, if parents, grandparents born in undivided India, then that person called as a person of Indian origin. So parent means generally mother and father. Grandparent means you have to check the maternal side as well as paternal side. That means mother side grandparents, father side grandparents, anyone is born in undivided India, that fellow can be called as what? Person of Indian origin. Sir, undivided India means? So before independence, Bangladesh, Pakistan, Myanmar, all the things are included in India. So any place they are born also, that person is called as a person of Indian origin. Now, this person left India or comes to India? Comes to India for what purpose? Visit purpose. In which year? During relevant previous year. So first exception who left India during the relevant previous year. In this exception who comes to India during the relevant previous year. Clear? Now, in this occasion, we have to check the SSC, that person total income, other than income from foreign sources. That means purely we are verifying the what? Indian sources related total income. Other than what? Other than income from foreign sources means we are calculating the total income from Indian sources. If that does not exceed 15 lakh, this is a provision, can you tell me? Miscellaneous Indian income you have or more Indian income you have? Miscellaneous only. Does not exceed 15 lakh. So that's why while calculating the residential status, simple apply B1, B2 is not applicable. B1, B2 means what? Basic condition 1 only we have to apply. Basic condition 2 is not applicable. Now, second case, if his total income other than income from foreign sources means what? Indian sources total income, if exceeds how much amount? 15 lakh. So he is an important person. He is a definitely important person. He is having the more than 15 lakh. So now, first B1 only you have to apply. If B1 satisfied, then answer is what? Resident. Now we have to check the A1 and the A2 for calculating the which status? Ordinary status. First only you have to apply what? Basic condition 1. If satisfied, answer is resident. Then ordinary status purpose you have to check the additional condition 1 and additional condition 2. Sir, B1 not satisfied, sir. Then we are trying to apply one more condition because our objectivity is nothing but I want to treat that person as a resident only because he having the total income from Indian sources more than 15 lakh. So that's why if B1 is not satisfied, yes ma, normally if B1 is not satisfied in this case, what we are done ma, issue closed. If B1 is not satisfied in this case, what we need to do ma, he is a non-resident only. But here we are not satisfied with the non-resident residential status. So that's why if B1 is not satisfied, we have to go for that what ma, modified B2. Remember, if B1 is not satisfied, we have to go for the which condition ma, modified B2. What is the basic condition 2 first? 60 days or more during the relevant previous year. Immediately preceding to the relevant previous year, how many years ma? 4 years. 365 days or more. But now, we have to modify that condition. B2, we have to modify. What is that modification we are done ma? Please check and tell me. What is that modification we are done in the B2 ma? Just instead of 60 days, we are replaced with the what ma? 120 days. 120 days. Now, if modified B2 is satisfied, then resident is an answer. But don't go for that ordinary status computation. Sir, actually B1 not satisfied means what is that answer we have to give ma? Non-resident. B1 not satisfied means what is the answer we have to give? Non-resident. But additionally we applied what ma? Modified B2. With the help we find that person as an what ma? Resident. But if you are applying A1 and A2, so then maybe he can become the ordinary resident. It is a horrible case only. Forcibly, you are treating that person as a resident by applying modified B2. Again, if you are saying as a resident and ordinary resident, that is an extremely difficult for the SSC. So that's why in such a case, don't apply A1 and A2 directly. Please treat that person as a what ma? Resident, but not ordinary resident. Sir, always for identifying the ordinary status, we have to apply additional condition 1 and additional condition 2. But exception 2. If he having the total income more than 15 lakh from Indian sources, if he satisfied the modified B2, directly he is a resident but not ordinary resident. Are you clear up to now? Again I am saying ma, always we have to check, but this is an exception case. Modified B2 satisfied means resident. Resident means what ma? Resident but not ordinary resident. Clear up to now? All of you? Now. Next ma. If modified B2 not satisfied means what we can do ma? We can't do anything. Directly we can classify as a non-resident. Sir, I don't know. If you are remembering in this way, you can remember. Nothing but how I drafted these things. Okay. So not only your friends and brothers and sisters also, they are trying to get sleep on. Okay, no problem. Smile. Mic? No, sir. If I am using the mic, what happened? Recording will be affected. You don't know how much pressure I have now. So messages, calls. You don't know. They are calling to my family members also. Huh? Sir? Family members, na? That means, okay, in Instagram or any other, also we can share the numbers, na? So like any post, etc. Or wedding card also, my father number is there. In my wedding card, my father number is there. They are sending the messages to my father also. A wedding card, that is in 2021, I shared the wedding card on Instagram. So, okay, no problem. We can carry on. Otherwise, it will be also pending. Next, remember, ma, individual residential status is done. Now, but one more residential status is there. What is that, ma? Deemed resident. Sir, I am expecting this concept as an at least MCQ. Remember, in intermediate level, I think it is not there in your intermediate level, but recently, I think 3 or 4 years back, that is added. Remember, so additionally, they are added the one residential status as a deemed resident. What is a deemed resident? If the following conditions are satisfied, so automatically we can treat that person as an what ma? Deemed resident. I will tell you. First of all, this is an unfavorable to the SSCs only. I will tell you the reason. He is not a resident, but we are deemed to be treated as what ma? Resident. First one, sir, this provision is applicable for that Indian citizen only. If you are treating deemed resident, sorry, one foreign citizen as a deemed resident, that is impossible. Okay, if you want to treat the deemed resident, if you want to treat one person as a deemed resident, that person must be Indian citizen. Second one, if you want to treat Mr. A is there, ma, example, Indian citizen, he having the total income other than foreign sources, means what, ma, from Indian sources, what is the total income, ma, that exceeds 15 lakh. So below 15 lakh, na, no need to apply the deemed resident concept. If you having the total income from the which sources, ma, Indian sources exceeds 15 lakh, then we have to treat that person as an deemed resident. Now he is not satisfied the B1 or B2. If he satisfied B1 or B2, directly he can become as an what, ma, resident. So not satisfied. Last point. He is not liable to pay tax in any country. Sir, he is situated in Malaysia. Yes, Mr. A is situated in Malaysia. He is not at all paying the tax in any country by way of doing the business or by way of any reason also he is not at all paying the tax. Now Indian government have a right to collect the tax on these Indian sources. So that's why this fellow is treated as directly as an what, ma, deemed resident. Sir, deemed resident if you got, then what is that ordinary status, sir? Sir, he is an not at all resident, but you are treating as an what, ma, resident. Again, if you are treating as an ordinary resident, that is an horrible. So that's why directly we can treat that person as a resident but not ordinary resident without checking the conditions of what, ma, additional condition 1 and additional condition 2. In two cases, if one person is a resident, directly we can give the residential status as a resident but not ordinary resident. What are the two cases? Deemed resident case. Second one, exception number 2, if you having the total income more than how much, ma, 15 lakh from Indian sources, if he satisfied which condition, modified B2, directly we can say that person as an what, ma, resident but not ordinary resident. Sir, are you understood the deemed resident concept, ma? So nothing but if any person is not paying the tax with respect to this Indian income in any country, now we are treating as a resident only, as an what, ma, deemed resident, and we are collecting the tax also on that person, but directly we are given the status as an what, ma, resident but not ordinary resident. Clear? Now individual residential status in and out is over, but now I want to test the residential status of HUF. Residential status of HUF is depending upon the what, ma, control and management. I will tell you what do you mean by the control and management, ma. Listen carefully. Control and management means it is a key decisions taking place. That means central control and management means what, ma, decision making place, not in day-to-day activities carried out to place or employees working place or agents working place. Example, HUF is there. HUF is selling the goods at Hyderabad. Can you directly say HUF control and management in Hyderabad? No. Employees working in Hyderabad or agents working in Hyderabad, day-to-day activities are carrying at Hyderabad. That is not a control and management. Who are the members, ma? Yes, HUF members are located in where, ma? Totally in USA. So where we are taking the decision for running of the HUF? Where, ma? USA. That is completely outside India. So that's why directly we can say that as an what, ma? Non-resident. Because control and management wholly outside India, directly we can say that answer as an resident, answer as an what, ma? Non-resident. Now some members are in USA, some members in India, so our total members are in Hyderabad. Now can you tell me, partly control in India, partly control outside India, or wholly in India? In such a case, please check it out. Control wholly in India, control partly in India or partly outside India. Now we can say that person as an what, ma? Resident. Control and management means what, ma? Decision making place. So who are the decision makers for the HUF, ma? Members. Members totally situated outside India. So that's why control and management outside India, answer is non-resident. Partially situated in India or outside India or wholly situated in India, then answer will become what, ma? Resident. Now we have to check the additional conditions for knowing the ordinary status. We have only one set of additional conditions, ma. That is section 6 subsection 6. It should be applicable only for whom, ma? Individual. So now who is an individual here? Karta. For determining the HUF ordinary status, we are applying the additional conditions for whom, ma? Karta. So now if Karta satisfies A1 and A2, answer is what, ma? Resident and ordinary resident. If Karta not satisfied these things, then HUF residential status is what, ma? Resident but not ordinary resident. Sir, additional conditions are always same, ma. That should be applied for individual only. Here For knowing the ordinary status of HUF, we are applying the same condition for one individual. That individual is Karta. Clear? Now, next, residential status of a company. Here I want to take you in detailed manner because I want to tell you in and out about the poem concept. Poem. You know anything about the poem? Oh, my two daughters, one daughter know total poems also. Many students doesn't know about the place of effective management concept in detail. So we have to learn all the things within 10 minutes only. That is an easy concept. So if you listen easy, if you are sleeping partially and wholly, that is a difficult only. I identified few persons. I turned the camera. I will try to turn the camera also from your side. So try. I can directly capture on from my mobile also. I can do editing. Now, residential status of a company. Sir, remember, domestic company, Indian company, always resident. Some students, intermediate students are asking the silly doubts. Okay. Sir, what about the public company residential status? Private, in income tax, always the two types only we have. For taxing also, for giving the impact of total income also, residential status also, domestic, foreign owned. Okay. Further, you can classify in your own way. There is no classification. Okay, we can classify within domestic company, maybe that is a private or public. Now, foreign company residential status is depending upon what poem, place of effective management. So, all the words of first letter only we are added poem. If poem located in India, resident. If poem located outside India, answer is non-resident. Clear? No. So, we can discuss about the place of effective management in and out did. Please check. Place of effective management we are required to calculate for the which company foreign company or Indian company? Foreign company. Place of effective management for foreign company determining is based on the following requirements. What is the following requirement? Active business outside India. So active business outside India. This is only shortcut in exam. Directly they can give it as an ABOI test, or we can call it as a business test also. If you want to know about the poem, first you have to test one thing. What is that? ABOI test. What is that? Active business outside India test. So now I will tell you the first what is that active business outside India. In the name itself, we can identify that the company having that business actively in outside India. Shall we check, Yes. A company said to be engaged in active business outside India if the following conditions are satisfied. If the following condition, how many conditions, 4. 4 conditions are cumulatively satisfied, then we can say that company having that active business outside India. First one, first condition, passive income is 50% or less than the 50% of total income. Now, we have to learn the what do you mean by the passive income. Total income means you can identify easily, but the meaning of passive income is important here. Compare the passive income. Next, total income, not active array. Passive income. Next one, total income. You have to compare these two things. If it is less than 50% or equal to 50%, then we can say one condition is satisfied. Passive income means, yes, remember, income from the transactions where both the purchase and the sale from or to what associated enterprise. I will tell you simply. I am doing the purchase from that associated enterprise. I am selling also to the associated enterprise. Now, if I got any income, that income is what? Passive income. Both the sales, purchases also from that associated enterprises is done. Income from such a transaction is called as what? Passive income. Remember, sir, say purchase from the unrelated party, sales to the related party. This is not a passive income. Passive income means one transaction, purchase, sale also. Both the things, if you are connecting with the what associated enterprise, that income from the transaction is stated as what passive income. Both. Next, one more thing. What do you mean by the AE? That we are already discussed in transfer pricing chapter. Now, if any income, royalty income, dividend income, capital gain income, interest income, rental income. Sir, I will tell you one simple thing, ma. Now, I am doing the business. This is an active income for me. This is an active income. Out of the business profits, I purchased the shares, securities, some buildings. From that, if any income I am receiving, that is only simply passive income. That is only the point. That is only the point. Royalty, dividend, capital gain, interest, yes, rental income. These are all are examples of what ma passive incomes only. Now, if the one problem also we can discuss ma in handwritten notes we have, you can get the complete clarity about this passive income, total income classification also. But hold that all the things for 5 minutes. Next, sir, please take the total assets. Yes, ma. Please take total assets less than 50% of total assets situated where ma India. Please calculate that company total assets ma. Out of that, less than 50% situated in India means more assets are situated where ma outside India. Majority situated outside India. That's why that company having that active business where outside India. Now next one. Sir, please calculate the total number of employees on that 50%. Less than 50% of total number of employees are situated in India or resident of India. Means, example, 100 employees are there. 30 only Indian residents, 30 only situated in India. Remaining 70 situated where ma outside India. That means actively they are working in where outside India. Next, sir, now this is the number of employees related point ma. This is their salary related point. Payroll expenses, if you are verified that, payroll means what ma salary paid related details. If you verified that 50% less than is given to whom ma above employees. So 10 lakh salary, 4 lakh only given to whom ma Indian employees or Indian residents. The remaining is nothing but what ma outside. That means the most of the salary also paid to the employees who are situated in outside India. So first condition, passive income. Second condition, assets. Third condition, number of employees. Fourth condition, payroll. Now, if these conditions are all satisfied, we can say the company having that business actively where ma outside India. Come back. If foreign company fulfill the active business outside India test, then poem is treated as where ma outside India only. Effectively, their management is situated where ma outside India only. Because they are doing business actively outside India, so that's why poem also can be treated as outside India if majority board meetings are held in outside India. So, example, one foreign company, active business outside India test satisfied ma, they held that 4 board meetings. I think in a calendar year we have to hold 4 ena law point ma 4 ena 4. Okay, more than 4 also we can conduct, but at least 4. Okay, now out of the 4 conducted in outside India. That's why now poem is located where ma outside India. That residential status is nothing but what ma non-resident. Sir, out of 4, 3 conducted in India. Then what will happen ma? Poem in India. Answer is resident. Remember, next, this is an important ma. If decision making authority is not a board of directors. Example, one foreign company is there ma, that is satisfied the ABOI test also. Okay, ABOI test also satisfied. 4 board meetings are conducted outside India only. Totally 4 only conducted, 4 also outside India. Now directly you can say residential status as an what ma non-resident, because poem is situated in outside India. But here, board of directors are namesake only. This foreign company is an subsidiary to the Indian holding company. It is a subsidiary company. One Indian company is there. For that Indian company, they are acting as an what ma subsidiary. Who is a decision makers ma here? Indian company. So now residential status directly what ma poem is in India. Then directly residential status is what ma resident only. That is only one example I given ma. One Sweden company is there, it is a subsidiary. Indian company is a holding company. Now who is in decision making for the Sweden company ma? Holding company. So all board meetings held in outside India also, they are satisfied ABOI test also. But who is a decision makers ma? For that Sweden, poem is always situated in where ma? India. Okay. First, if you want to know about the poem, you have to check the ABOI test. If it is satisfied, majority of board meetings are held in outside India, poem is outside India only. But decision making is Indian companies or any Indian resident, then poem is situated in where ma? India. So company not satisfied the ABOI test. Not satisfied the what ma? Active business outside India test. Now, how to calculate the poem? In stage 1 ma, first, identify the person who are taking the decision. Yes, can you tell me in company who are taking decision ma mostly? Board of directors. Next, yes ma, stage 2, determination of their place where they are taking the decision. That place only called as poem. If active business outside India satisfied, depends upon the majority of board meetings, we can decide. If active business outside India is not satisfied, 2 stages we have to follow. Where they are taking the decision, sorry, who are taking the decision. Next question ma, where they are taking the decision. Based on that, we can decide the poem. Now, directly, I want to start the one question. So, listen carefully. If without this question, after this question, you can ask. Okay. Sir, Workbook Limited is incorporated in Japan. It is a subsidiary company. What is that company ma? Workbook Limited. It is a foreign company, but it is a subsidiary company to the Concept Book Limited. Okay. Now, we are healthy. How much amount of shares in the workbook ma? 55%. Very good morning to all of you. Okay. Next, I'm given the details related to the Concept Book I'm giving the details related to the workbook company ma. What are the assets they are located in India and what are the assets are located in what ma? Japan also. Remember, fixed assets, can you tell me these details are related to which company ma? Foreign company. Workbook Limited related details I am given. Fixed asset, in India, how much amount is there ma? 120 rupees or lakhs, whatever it may be. So next, 80. Intangible assets, how much ma? 50, 200. Other assets, value for the books, 40, 120. Now, income from trading operation, above all or what ma? Assets. Now, I am talking about the income. Trading operations related income is how much ma? In India, 25 and in outside India, 50. So, in that above 25 and 50, following things are included. Can you tell me? Read these 3 things. Out of these 3, which one is a passive income you need to identify? Purchases from AE, sale to unrelated party. Can you treat it as a passive income? No. Sales to AE, purchases from unrelated party, whether it isn't treated as a passive income? No. Income from the transaction, both the purchases and the sales are through that what ma? AE. Now we can treat this as an what ma? Passive income. That means your trading operations 25-50, out of that 510 is nothing but what ma? Passive income. Next, can you tell me this is also passive income? Dividend, royalty, interest, these are all are what ma? Passive income. So dividend and interest in this case passive income. Now, number of employees in India, outside India, payroll expenses details also given. Now, we can verify the one by one conditions ma. First condition, passive income versus 50% of what ma? Total income. Now, can you tell me total income means what ma? Trading operations related. Please calculate the total income of that workbook limited ma. 50 plus 25. And this is also income only na. But that isn't business income. It is an income from other sources, taxable income. Totally how much income ma? 20 plus 15. Next 25 plus 50. Total ma? 110. Out of that 50%, how much ma? 55. Passive income, you know already. Passive income means these 2 are what ma? Passive incomes. Please calculate the total of passive incomes ma. 5, 10, 20, 15. 5, 0. Can you tell me whether it is a less than or more than ma? Less than. So passive income is less than or equal to 50% of total income. That's why condition 1 satisfied. Now condition 2 we have to check ma. Assets in India is less than 50% of what ma? Total assets. So now total assets, I think this isn't total assets ma. But assets in India means what ma? These 3 only. Please calculate. Assets, total assets, please calculate. Total assets, please calculate. If you are sleeping now, it will be your 14 mark question. You don't know my mouth power. You don't know. After exams, you can realize. Please wake up for all of you. Total assets number. Yes, ma. How much, ma? 6. Then out of the 50% is 305 only, na. Please calculate that assets in India. 210. So less or more, ma? Less. So that's why satisfied. That means actively assets situated outside India only. Next, like number of employees you can check, ma, as well as payroll condition also you can check. These are all are satisfied only. Now, all the conditions are satisfied. That company having that what, ma, satisfy the active business outside India. Now we have to check POEM outside India if the majority of board meetings are located where, ma, outside India. This is only question they will give you. If you know the provision, then you can use this theory and you can write very well. Many students are confused here. Total income means, yes, ma, trading operations income as well as passive incomes. Many students are asking, sir, why you are not considered? These are all the things are already included in what, ma? 25 as well as 50. Clear? This is taken from CA final study material. Now I think this question also removed, but they can test these things at any time. Now, so finally, I want to calculate the residential status of others. Sir, company residential status should be ended with the resident and non-resident. No need to calculate what, ma? Ordinary status for the resident. Now, I think if we are conducted SCM sessions, you need SCM sessions also, na? Next Sunday, Saturday. SFM? SFM. I will not give a chance. Okay, we can check. And one faculty related to SCM is asked for taking the classes, and already he contacted with the Karthik sir also. Karthik sir will communicate remaining things to you. If possible, next Sunday, Saturday, SCM, not SFM. Okay? Okay. It's your wish, ra. Okay? Now, just I'm intimating. Now, remember, partnership from AOP, BOI, AJP, local authority residential status. Local authority means municipality, panchayat, corporations, always resident. But coming to the remaining SSC's residential status, please check the control and management. Do you know what do you mean by the control and management? Central control and management means decision making place. Not employees working place, not an agent working place, not an day-to-day activities carrying on place. No, wholly or partly in India if the control and management resident, otherwise non-resident. So this is only the residential status relating to whom all the SSC's residential status done. So next, based on residential status, we need to know about the what scope of total income. Section 5, I will discuss it from the concept book. Just have a look about it, not required. Just have a look about it. Please check it out the screen. No need to refer anything, ma. Yeah. I think you know these questions very well. Section 5. In residential status, you know these questions very well. In final level also, we can get this type of questions, remember. If I am saying now all the persons are looking, I think he is saying all the things in a wrong way. Maybe, yes, section 5, scope of total income, whatever in residential status you have, like some incomes they will give you, whether what is the total income for that SSE is in resident, under ordinary resident, not ordinary resident, non-resident. This content we have in our final also. If your luck favors, they will give you this type of questions also. So that's why. So, okay, remember, yes, check it out this screen. Please check it out this screen. Maybe you will not believe if I am saying, they are given this question for how many marks, ma? In June 2023, they are given this question for the how many marks? 6 marks. Okay, I will tell you. Chaturvedi is in how many years of age, ma? 45 years of age. So they are asking. So they are not mentioned anything either resident or non-resident. So based on that, you have to calculate the total income and the tax liability under both the regimes. total income computation case, here directly they are given that SSC as a resident only. They are not saying anything resident, but they can ask you both the cases also. And next, regular provisions as well as 115 BAC, and you have to suggest which one is the best. But on that time tax rates are different, now tax rates are different. Definitely you will get total income computation of an individual, but here resident only given. You can get that same question related to yes section 5 also. They can ask you the same question from the intermediate also. But have a look, don't do the practice of the total inter questions. Remember, sir, first case it is an Indian income. Why it is an Indian income? Please tell me. It is received in India or deemed to received in India. So no need to check about the earnings because the received connected to India. So that's why we can say as an what ma Indian income. So remember one rule, Indian income will be taxable in the hands of all SSCs. Whether you are an ordinary, non-resident, it is taxable only. Second one ma, it is earning in India or deemed to earn in India. So that's why irrespective of the receipt, that is an what ma Indian income. What is the rule? Indian income is taxable in the hands of all the SSCs. Now, so third one important, income accrues in outside India, received also where outside India. What is that income? Foreign income. So if it is a foreign income, it will be taxable only in the hands of whom? Resident and ordinary resident. But it is a special foreign income. You earned and received in outside India, but from a business, that business is controlling in where India, or you are earning that income from a profession, that profession is set up in India. So that's why that foreign income having connection with India. So that's why please give the tax treatment yes in the hands of whom? Resident category person, not taxable in the hands of whom? Non-resident. It is a foreign income. Only one person is required to pay the tax on foreign income in India, ordinary resident. But here, that foreign income having connection in India, that's why give the taxability in the hands of resident category. So next one, it is a purely foreign income. There is no connection with India because controlling from outside India, profession setup also outside India. It is a purely foreign income. So that's why only one person is liable to tax on that income. Who is that? Ordinary resident. Are you understood the differentiation between the 3 and 4? 3 foreign income only, 4 also foreign income. But third point related foreign income having connection with India because you are controlling that business from the India only. Your profession also set up in India. Now, yes sir, fifth point important, listen. During the current previous year, you earn the one foreign income. During the current previous year, you earn the foreign income. You are remitted also during the year. Sir, here for remittance, there is no tax treatment. During the current previous year, you earned which income? Foreign income. So that means in which year you earn? 24-25. Foreign income is taxable only in the hands of one hero, resident and ordinary resident only. Now, income earned and received outside India in earlier years, can you tell me? Okay, 16-17, one foreign income earned. Now that is remitted to India during the which year? 24-25. For remittance, there is no tax treatment. For earning of foreign income, we are already given tax treatment in which year? 16-17. That's why for remittance, there is no tax treatment. Clear? Above case is nothing but during this year you earn the foreign income. So that's why we are given the tax treatment, not for remittance. Every time. Remittance means what? My example, your brother earned the one income in the outside India. While he's sending the money to your parents, is there any tax payment requirement is needed? No. Because already it is taxed, he can use for his own purposes also. So that is only the point. At the time of earning the foreign income, it is taxed. That's why remitted to India, there is no tax treatment. Already in earlier years, he earned that amount, but now he is remitted to India. Already in 16-17, that is taxed. That's why no need to tax when he is sending that amount to India. Last one, last 2 points. Past untaxed profits. Earlier year, that amount is not taxed. Now also, if that amount is, yes, again coming to the taxability also, no need to give the tax. Because of last year's loss, that is an exempted or not taxable. So now, that is not at all taxable in the present years also if that is coming to the tax treatment. Next, exempted incomes are always what? Not taxable. So can I tell you the one shortcut for this total thing? I will tell you. Remember, if Indian income is there, if I am saying that what? Indian income. So that is taxable in the hands of whom? ROR, RB, NOR, NR. Are you clear? Next, if that is a foreign income purely, it will be taxable only in the hands of whom? ROR. So again I can say in the hands of ROR, which income is taxable? Global income. And third point, if you remembered properly, then entire discussion is closed. Third point is what? Foreign income, but there is a connection with India. So that's why I give the tax treatment in the hands of resident category, either ordinary, not ordinary. Now, it is over. Now, section 6, section 5 also over. Now, we can enter into the presumptive taxation provision. Yes, you can. Wait. You can. I think you are asking workbook question and a concept book related question. I think you are asking about one point. What is that? Sir, student asking the doubt, please check it out. Here 55% is there, but decision making authority is their board of directors only. I am not giving anything about the, yes, holding company directors or holding company is taking the decisions related to subsidiary. I am not given that point. So that's why, yes, what is that? Poem we can take, ma. Simply, poem is outside India. If that board of directors are meeting are located outside India. Majority of board of directors meetings are located in outside India. If I am adding in that question as a sub question, sir, decision making authority is not a board of directors, then answer directly what, ma? Poem is in India only, because who are taking the decision on that occasion? This board of directors are not a decision makers, means who can take the decision, ma? Concept Book Limited, that is an Indian company or Indian resident. Directly we can give the poem to India. Okay. Sir, your doubt?
Sir, no, sir, but
Clear.
because the ABI conditions that you said, is it either or
all four conditions? Sir, you are asking that under this condition means under. No. Holding company controlling from?
Then we need him to check all.
No need to check. Directly you can give. That's why they will not give you like that. If they are given that holding company is only having that controlling and decision making authority, directly you can write that answer poem in what, ma? India. So that's why they will not give that question. If they are given also extra question, they will give you. Now, so okay, before going to before going to the presumptive taxation, ma, so I want to cover one small concept, then after I will cover the presumptive taxation overall. Okay. So I want to go with the concept book. Okay. Presumptive taxation provisions. After the break we can start, ma. Before the break I want to cover the 44 DA. Ma, in our newly released workbook also we have questions. Mandatorily we can discuss all the questions related to non-resident. In workbook we have in 6 or 7. We can discuss total 6 or 7. Now remember 44 DA. What is that 44 DA, ma? Special provisions for computing income by way of royalties in case of whom, ma? Non-resident. Sir, if any non-resident having that income from what, ma? Royalties, how we can compute the income? Special person is a non-resident. Special income is what, ma? Royalty income. Now, shall we start? How to compute that income by way of royalty in case of non-resident? Remember the section number 44 DA. If this provision is applicable to whom? Non-resident. Maybe not being in company or foreign company. Next, conditions are clearly given. SSE is receiving the what, ma? Royalty or fees from technical services from Government of India or Indian concern. Concern means what, ma? Entity under one agreement. So I will try to draw a diagram, ma. Non-resident is receiving the, yes, ma, one income from the government or what, ma? Indian entity. Yes, what is that amount he is going to receive, ma? Royalty amount or FTS, fees for technical service. But remember, there is an agreement with regarding the that agreement between these parties on or after, these dates are important, 31st March 2003. 31st March 2003. Now, remember, this fellow non-resident needs to give the services to them. Because of that services, as consideration, they will pay what ma? Royalty and fees for technical services. Am I correct? No. SSC conducts the business in India, yes, by using the one fixed place of what ma? Business. Nothing but he needs to establish the what ma? One permanent establishment in where ma? India. PE means what ma? Permanent establishment. That means it is a fixed place of business. Whole business or part of the business also can carry it on that place. That is only called as what ma? Permanent establishment. He needs to give the services from this PE. If this PE is located where ma? In India. These are all our conditions. If you remember, then only which section can be applied also you can realize. First thing, he can provide the services by using the PE to that central government or any government or Indian entity. With respect to that, he can receive the royalty pursuant to that agreement. That agreement date is nothing but after or on or after? After 31st March 2003. Now, income shall be computed under the head what ma? PCBP. So, against that, yes ma. Suppose if they are given the 10 lakh. So, the 10 lakh is taxable or any deduction ma? But clearly they are saying no deduction shall be allowed in respect to. Example. Simple equation I will tell you. In order to provide these services, whatever that expenses incurred, that only you can take it as deduction. No other deductions can be taken from that income. Okay. Our expenditure allowances not wholly and exclusively incurred. That means what ma? They are not allowed. Not wholly. That means wholly and exclusively if you incurred any expenditure with regarding this service, 1 lakh, then you can remove that what ma? 1 lakh. Are you clear ma up to now? So that is only the point. In order to receive this amount, you are providing such service. For such service, wholly and exclusively if you incurred any expenditure, 1 lakh expenditure incurred. Now, 1 lakh you can remove and 9 lakh only taxable under which head of income ma? PCB. Okay, now. So I don't want to waste my time also. These things already you know ma. Tax audit report generally required to file under yes ma. What is the date ma? Tax audit. Tax audit related due date is nothing but what ma? 31st October. For that you have to submit the report before what ma? 1 month before the tax audit. Sorry, 1 month before the what ma? Due date. So normally if any SSC engaged in the international transaction, what is the due date ma? So 1 month before we have to submit the what ma? Remember? So this is a normal point only ma. So SSC who is required to furnish the report refer to section 92E. So what is the due date ma? 30th. So nothing but exactly 1 month before we have to submit the what ma? Audit report. Here also the same thing they are saying, but not required to remember, but already you know 1 month exactly before the due date we have to submit that all the reports. Now please open the workbook. Non-resident related, that is involving in our first chapter only. Yes, one question we can open ma. Sir, many students are raising the doubt related to this question. So in previous EO batches, if I am saying anything also, many students are asking this type of concept as a doubt. So for that only they created one question. I don't know how they are created this question also, how they are copied this question also, but purpose is fulfilled. Now listen. Techno Limited German company received 4.5 crores in a previous year 24-25 as an fees from technical services from Krishna Limited Indian company under agreement approved by the what ma? Central government. I think foreign company receiving the FTS amount from the Indian company or not ma? Yes. What is that amount ma? 4.5 crore. Agreement is there or not? Yes. That such expenses incurred for earning such income is what ma? 35. Now, they are asking the taxability of the Techno Limited in India if that doesn't have any permanent establishment, and if they have a permanent establishment, if that service is also effectively connected with the permanent establishment, then in case B only we can apply the which section ma? Section 44 DA. Yes, ma. So that is only case B, ma. Presence of PE is there, automatically we have to apply 44DA. In future, I will tell you, if PE is not there, how it will be taxable. Now, other details also they are given, ma. Fees for technical services received from the Krishna Limited 4.5 crore. Expenses incurred for earning such income is 35 lakh. Now, other companies under approved agreements also we received 2.8 crores. Expenses related to this income, yes ma, they are given. Next, not wholly and exclusively incurred expenses given, and amount paid by the PE to head office, not reimbursement of actual expenses, they are given some points. Now, we have to calculate that income, ma. So 44DA, what is the fees from technical services from the, yes ma, Krishna Limited and other companies, ma, 7,30,000. What is that allowable expenses, ma? Wholly and exclusively if any expenditure incurred for providing such services, we can deduct, ma. What are the expenses we are incurred, ma? One is in 35 lakh, another one is in 30 lakh. These two things we can take it as deduction. So here we are receiving the fees from technical services from two companies. The two companies income we are added, that is 7 crore, 30 lakh. From that, please reduce these expenses. Yes, ma. Net income before what, ma? Disallowances. I already told. So these are not wholly and exclusively incurred. That's why we can't give the deduction. And if any amount paid by the PE to head office also, that is not an expenditure. So that's why that is also what, ma? Not allowed. What is the total income, ma? Yes. Now that is only these 2 points, ma. Not wholly and exclusively incurred. We cannot give the deduction. If any amount paid by the PE to the head office, PE, if anything amount is paid to this head office as a reimbursement of expenditure also, for that can you take any deduction? No. Only exclusively, wholly and exclusively if any expenditure is incurred, for that only you can take deduction. Now remember, what is the tax liability, ma, for foreign company? 35. If you are written the 40%, you will get 0 marks in exam. MCQs also, they will allocate the 0 marks for you. Why? One most important amendment, foreign company tax rate amended to 35. Okay. Outflow, if you are taken 40 also, they will not tolerate. Remember. So what is that? 2 crore 32 lakh. Ma, foreign company income exceeded the 1 crore. So what is that surcharge, ma? 2% of OTRA, income tax. Surcharge and income tax if you are added, for that we have to add health and education says, you will get how much amount, ma? Tax liability, this one. Are you clear, ma, up to now? Sir, if PE is there, with the help of that PE, if you provided such services, then we have to apply 44DA provision. Under which head we are required to pay the tax, ma? Yes, ma. Taxable at normal tax rate. It is taxable under PCBP head only. Okay. Now, immediately, I want to tell you, if there is no PE, what is the tax treatment? Shall we start, ma? Okay. Give me permission for 5 more minutes, ma. Now, I want to talk about the 115A subsection 1 clause B. Okay. Nothing will happen, ra? Please listen. It is applicable for whom? Non-resident. Remember, certain incomes of non-resident. One income I want to take in the second section. 115A subsection 1 clause B. If an assessee is a non-resident, he receives a royalty income, fees for technical services income, other than covered in 44DA. So how you can differentiate these two sections? With the help of that permanent establishment in India, if you are provided the services, 44DA. Otherwise what, ma? 115A subsection 1 class B. Now, you are here also taken the agreement from the government or Indian concern, but agreement on or after what, ma? 1/4/1976. In the previous one, 31st March 2003. Now, remember, what is the rate, ra? 20%. What is the rate? 20 special tax rate. Now you can't apply 35. 35 is a normal tax rate applicable under 44DA, but now 20%. Sir, mark my words, this is only your next attempt to question. Last attempt to question also, this one only. I will show you. Now, sir, again shall we give the deductions under 28 to 44C? Can you tell me 28 to 44C, which provisions, ma? Maya. Okay. Oh, thank you. I think always I am thinking why I am here. But okay, now you are saying the reason. Okay, anyhow, 28 to 44 PCB. That's enough. Okay. Now, section 57 is an income from other sources related deductions. We can't give these deductions again because that is an directly tax rate and concessional tax rate 20%. Again, we can't give any one of the deductions. Now, chapter 6A deduction shall you give? Yes. Next, indexation benefit not applicable. With capital gain, then we can think about the indexation. Here, it is just an income taxable at a normal rates. Directly, it will be taxable under PCBP or income from other sources. That's why no need to apply the indexation. Now, last one, return of income is required to furnish. Even though you are having this income, yes, already tax deducted also, but you are required to furnish the what return of income. Now, directly we can start But here there is no PE, so that's why automatically we have to apply which section Section 115 subsection 1 class B. So that is only, but they written it as on 115. Yeah, no problem. What is the tax rate 20% without deduction of expenses. So what is that amount we received totally from two companies? What is that amount 7 crore 30 lakh. There is no deductions. Directly taxable at 20%. Please add surcharge and health and education cess. How you are differentiated these two sections based on PE. If non-resident established any PE in India, with the help of that PE, if you provided the services, that is 44 DA. If you are not connected to that PE and if you provided, can you tell me that is nothing but what 115 subsection 115A subsection 1 class B. So now can you tell me, do you know this provision before also? To be honest. No? Okay. So I will show you last exam question. Now if you identified on your own, you can do similarly also remaining questions. So that is only the reason I am saying, if you want to learn some chapters on your own self-study also, concentrate on the total chapter. Non-resident, if you are less than the only section 5, section 6, if you are ignoring the remaining things, no use. So just a last exam question paper I will open just we can try. Not total question may be difficult to solve, but try to solve some extent of the question also, it's okay. Have a try. Sorry, I think if you are seeing that answer, that is not correct. No. Yes, Paul Limited is a foreign company. Paul Limited is a foreign company that is engaged in the civil construction. So that's why these are different. Two questions are combined. After presumptive taxation provision, you can solve total also, but I want to tell you. Remember, civil construction, they are engaged. So they want to do that various locations is West Bengal. So that means the foreign company is doing some civil constructions in West Bengal state. So that project approved by whom? Central government. Other provisions, nothing but they are engaged in the consultancy services also. They are providing the services which by using branch in Chennai. So that's why can I call it as PE? They are providing the services by using PE in India. No, there is no administrative and financial nexus between for civil constructions, they are not using the PE service. They are using the PE services only for the what consultancy related. Now, they are saying gross amount received from the fees for technical services to Indian companies. How much they received? 2 lakh. So now, what is the section we have to apply? PE is there 44 DA. 44 DA. So wholly and exclusively, if you incurred any expenditure for them, what is that amount you are incurred? So 2 lakh minus 70,000, it is an 1 lakh 30,000. On that you can apply the normal tax rate 35% plus you can apply the cess 4%. That is only, sorry, they are not asking the total tax liability. Tax also they are asking. Total income they are asking as well as what tax liability also they are asking. Now you can apply the 35% plus what 4%. These above 3 points we can discuss after the break along with the presumptive taxation provisions. Are you clear? Sir, it is not a difficult chapter. The limited provisions only we have one by one we need to discuss. 8 plus 2 marks, that is totally 9 to 10 marks chapter. And one more thing, if you attempted these difficult chapters, definitely the valuation or impression can be increased. Don't give choice. Non-resident workbook questions you have to solve at any cost, because easy questions only they are given. Many students, if they are seeing just it isn't difficult only. If you are actually entered into the question, this is very easy. They are saying the provision, as per the provision you have to calculate the total income. That's enough. Now, so సార్ అడిగిన బ్రేక్ తీసుకోవచ్చు అని. షల్ వి టేక్ ఏ బ్రేక్ అని? ఎస్, షల్ వి స్టార్ట్ నౌ? సో నౌ we can start with the presumptive taxation provisions that are exclusively applicable for non-resident. How many presumptive taxation provisions are there for the non-resident, ma? 44B, 44BB, 44BBA, 44BBB, amendment 44BBC. Newly they are inserted in the Finance Act 2024. Totally 5 presumptive taxation provisions are there. Okay. Okay, directly from concept book we can start, ma. One by one provisions. It is very easy. Listen carefully. First provision is 44B. What is that? 44B. Yes, check it out. Just check it out the screen. 44B is applicable for if any non-resident engaged in which business, ma? Shipping business. If any non-resident engaged in the shipping business, for him we can apply the presumptive taxation provision under section 44B. Applicable for all non-resident if the SSE engaged in the operation of ships. But within the bracket one word is there. Other than cruise ships referred in 44BBC. What do you mean by the cruise ships? Nothing but tours. So Titanic is the best example. That is a cruise ship only. For that ship, presumptive taxation provision separately given in a new section, that is in what, ma? 44BBC. Other than that ships, all the ships are covered in this business, in this provision only. Now, how to calculate the estimated income? Yes, please check it out the screen first of all. Yes, if that ship starting from India and to that outside India, okay, there is one way we can travel. Another way, starting point is outside India and we can reach to that what, ma? India. Now, in this case, yes, ma, in first case, please remember always starting point. For all sections, this only shortcut we can apply. Please check only starting point. Starting point is India. So, all incomes can be taken. On that income, we can apply the 7.5%. That is only presumptive income. If starting point in India, whether that amount is received or yet to be received in India or outside India also, that is included in this amount, on that we can apply what percentage, ma? 7.5. If ship is starting from outside India, in such a case, if that is received in India, that is only included in the what, ma? Amount. This is a shortcut we can apply, ma. If you are reading this entire lines, you will get the what? So amount means nothing but they are saying if a ship starting from India, so what is that amount we can include, ma? Any amount, whether received or yet to be received. You can receive on behalf of you, any agents also can receive. Example, I am purchasing the Indigo tickets. So directly I am purchasing from Indigo or from Paytm? Paytm. Nothing but you can directly pay that amount to that non-resident who are doing the shipping business, or for their agents also you can pay. So all the things can be included, whether that is received in India, outside India. Next, ma, if starting point is an outside India, if that amount is received in India only, we can include on this amount, we can apply 7.5%. But one important point is there, MCQ point, listen carefully. The amount paid or payable or received or receivable, as the case may be, it shall also include that what, ma? Demurrage charges, handling charges or any other similar nature of charges. Means what, ma? Sir, if you are not clearing the goods within certain number of days as per the customs duties, custom duty authorities, you have to pay that what, ma? Penalty charges like demurrage charges, handling charges, etc. That is also we can include. On that we can calculate that what, ma? 7.5. No, but we don't have any questions related to this 44B. But immediately I want to start with the 44BBA. Yes, sir. What are the provisions we have with respect to the, yes, ma, presumptive taxation provisions, ma? First, give me 1 minute time. First provision, what we done, ma? 44B. First 44B. What is that, ma? Shipping business. Okay, nothing but shipping business other than what, ma? Cruise ships. Next, we have an 44BB also, but we are discussing after some time. We can discuss that provision. Next to 44BB, ye na? See ya, Ure. Ye only. Thank you for giving that confusion, right? 44BBA. So now, if you are engaged in the aircraft business, yes, we can calculate the presumptive income by using the 44BBA. So first, waterways covered. Now, airways we can discuss. After that, we can go for others. Now, non-resident SSC is engaged in the operation of aircraft. Now, we can calculate the amount. On that amount, we can apply what is the percentage, ma? 5%. So now, same, ma? How to calculate that amount? If starting point is India, to outside India, all the amounts can be included. Means it is received in India or outside India, deemed to received, yet to be received, all the things can be included. If starting point is an outside India to India, so then what is that amount is included, ma? If that is received in India only, we can. So now immediately we can discuss the workbook question. That means if any question is given in our workbook, now first we can give the preference to the workbook. If not there, then we can open our workbook. Definitely they will give you, or we can check whether they are given or not also. Yes, they are given. Same question we have in our workbook also, but the same question they are changing the names and they are given, ma. Mr. Jed is a non-resident. He is an operating that what, ma? Aircraft between the Dubai and Delhi. He received the following amounts during the previous year. Now, can you tell me? Passenger, carriage of passengers from Delhi. That means it is a destination starting from what, ma? Sorry, starting from India to outside India. Next one also you can write from Delhi only. That means same. Here also from Delhi only, same. Here also, okay, akka, okay. So it is nothing but what, ma? Dubai. Okay, so it is starting from outside India. Yes, reach to what, ma? India. Next one, ma? Delhi. So that means starting from India, reach to outside India. So now, can you tell me, in this case, anything also we can include, ma? Yeah, whether received in India or outside India, these are all the things are irrelevant. So I can say always it is in what, ma? Included. But this can be include only if received where, ma? India. So automatically that is also received in where, ma? India. So that's why total amounts I can include. Calculate total amounts, ma. Sorry, this is in 7 crore, not. Please calculate, these are all the things, ma. Because if that is starting from India, any amount also we can add. If starting from outside India, if received in India only we can add. Sir, here starting from what, ma? Outside India, but that amount is received in where, ma? India. That's why total amount how much, ma? Ma? 7.5 crores. On that you can apply 5%. What is that, ma? So if you are forgetting that 5%, no one can help you in exam. Definitely your friend can say more than 5 only. Okay, in exam if you are taking the help also, he can say more than 5 only. This is an aircraft, section 44BBA at the rate of 5%. If that is a shipping business, we have to follow that what, ma? 7.5%. Now listen carefully. Sir, they are given the expenditure. Many students are doing income minus expenses. No, you have to follow the presumptive taxation provision. So, and they are asking the tax under which section, ma? 44BBA. No, sir, I don't want to follow the 44BA. Our income is 7.5 crore minus expenditure 7 crores. If you are written like this, that is not correct. After class also we can say. No issue. That is not tax rate. Out of the tax is non-resident. Non-resident, if he is in company, 35%. If they are engaging in a company or if they are individual, slab rates you can follow. Tax rates are normal only. But now we are calculating the presumptive income. So here SSC is individual. That's why you can follow that what, ma? Slab rates. Sorry? Anything also, sir. Here, wait, akka. Here we are calculating the income. After that, if you want to pay the tax as per 115 BSE also, you can follow. For non-resident also, default tax regime is 115 BSE only. For individual HUF, AOP, BOI, AJP, whether they are resident or non-resident also, they can follow 115 BSE. If they don't want to follow the 115 BSE, they can shift from the 115 BSE to the old regime. For payment of tax is a different. Now we are calculating the income by using the presumptive taxation provision. So many students are asking, yes, sir, this is a tax rate. No. That isn't just income related computation. Are you clear? No. One more, ma. We can follow the next one. 44. Okay, this we can close, ma. 44 BB. What is it 44 BB? It is an important also, not at all tested now. Listen. Ma, normally in high sea levels, okay, we can do that what, ma? Petrol exploration, etc. Not exploration, yes ma, or extraction, whatever it may be. So now, you know, ONGC is an always doing this type of project in India in high sea levels. So that is an offshore installations, or we can call also. But, so definitely this is 100 to 200 kilometers far away from the port, etc. But now, many workers are working in this area. How they are getting the food supply, or any other machineries also, or anything also that can be supplied by whom? Some non-resident companies. Remember, profits and gains are in connection with the business of exploration. Now we are applying the section 44 BB for this non-resident, not who are doing an exploration. Example, in our AP, so Amalapuram city is there. In that ONGC, yes, exploration project is there. I think after 150 kilometers away from the beach. So regularly helicopters are traveling between this port and that offshore installation for supplying the food, plant and machinery, for supplying the lubricants, etc. Now who are connection with that businessman, nothing but any non-resident. So that is only the point. My example, SSE must be engaged in the business of, what is a business ma? So providing some services or providing some facilities, or he can supply some plant and machinery also, or he can supply all the things on what ma? Higher basis. So non-resident given the support in terms of what ma? Giving the machineries, or given the some connect services also. For what business ma? Prospecting, extraction, exploration of mineral oils. Here mineral oils means what ma? Petroleum, natural gas. Mineral oils means what ma? Petroleum, natural gas. Plant means these are all the things. Ships, aircrafts they can supply. Yes ma? Vehicles, drilling units, scientific operands, equipment, these are all the things are supplied. So without these services, can you tell me, so ONGC can do the services of an exploration? No. If they are given the support, whenever drilling units are required, yes, they will provide the drilling units. Whenever aircraft is required, they will provide the aircraft. So now, who can follow this presumptive taxation provision under 44 BMA? Such a non-resident. So non-resident SC means nothing but individual or company or whoever it may be. Simple ma, it is very easy. If that exploration related site is in India, any money we can include it in that amount. If that is located outside India, can you tell me, if that amount received in India, that is only included in this amount, on that amount we can apply what is the percentage? 10%. Sir, here destination point, reached point will not be there. Sir, that means one fixed location. So if that fixed location is nothing but in India, that means exploration site is located in India. Any amount also, whether received outside India, India to be received, yet to be received, all the things will be included. Next, if that location is outside India, if that amount received in India only included, on this total amount, we can calculate what ma? 10%. Now I am introducing one new point in this section. Yes, sir, I am calculated the books of accounts related income. What is that? Books of accounts related income. And I am calculated the section 44 BB income. Yes, books of accounts related income 12 lakh ma. But 44 BB, if you have followed that, you haven't 15 lakh. Which one you have to declare ma? 15 lakh. Because you have to minimum declare the how much amount ma? 15 lakh income. But can I declare the lower than the presumptive income ma? Yes, you can declare the lower than the presumptive income. On that occasion, you have to maintain that what ma? Books of accounts and tax audit. If your income more than basic exemption limit, and automatically for your file scrutiny assessment will be conducted. but this option is not available for the, yes, these two sections. So can you tell me nothing but what, ma? Connection with the what, ma? Exploration. So many students are thinking that this is nothing but a non-resident engaged in exploration business. No. Non-resident is supplying the services to the room who are engaging in the exploration. Can you tell me it is a special point? Why? We can declare the lower than the presumptive income also, but that is facility is not available in what, ma? Other provisions. So while I am discussing these two provisions, I am not at all discussed SSE can declare lower than the presumptive income. That option is not there. But in this section only that option is there. Now can you tell me what is the next section, ma? Section 44. B. Clear? No. Are you following what are the provisions for these, sir? Presumptive taxation. We are discussing the CMA final direct taxation in that non-resident chapter. So you are a CMA final student. So unfortunately, I am a CMA final direct taxation faculty. Now I am going to discuss the 44 triple B. Now this is only last exam 7-mark question. Okay, listen carefully. So business SSE engaged in the business construction. If you are seeing the last past BCCA YouTube videos, I already posted the non-resident taxation like 2 hours in Telugu last time. Okay, so on that I provided this section also as a revision, but I don't know how many of you understood the Telugu also. No one? Somewhat. You know Telugu? How? Mother tongue? Super. Okay, no problem. Hereafter I will teach only in English because on multiple batches I am unable to take. Okay, that is only the reason. Otherwise I can. Now in future, if I learn that Hindi or Tamil, I can take the classes in Tamil or Hindi. That will not be possible. If you are travel along with me also, I will teach Telugu, but I will not learn that what, ma? Tamil or any other language also. Remember, sir, this is an applicable for foreign company only. That means this is a speciality involved in this section. All the provision for all non-resident SSEs, but it is for company. So what is that 44 triple B? Now, if that SSE engaged in the civil constructions, or if he engaged in the erection of a plant and machinery, that means if he installing any plant and machinery, yes, in connection with the turnkey project, complete project he needs to surrender. Example, if any company taken the metro projects, so they will complete the total project and they are ready to move that project, and after that only that will be handed over to what, government. So that is only normally turnkey project. So now that the central government needs to be approved, and or we can take that approval of the any other Ministry of Energy related department also. Remember, the permissions also needs to be required. Example, any foreign company who is engaged in the civil construction in India. Now, remember, directly on that amount, what is the percentage, 10%. So now you can declare the lower than the presumptive income also, but books you have to maintain, tax audit is also required, and on that scrutiny assessment also will possible. Remember here, simple 10% of what, amount, because always this project is constructed in where, India. So that's why any amount also we can include. On that amount we can apply what rate, 10%. Now can you tell me what is the section? Yes, civil construction. Yes, we can write it in easy way. What is that, civil construction. So now we can say it is a special point only. What is the reason? We can declare the lower than the presumptive income also. What are the rates, 7.5%. Yes, 10%, 5%. So now we can discuss the last exam question. They are given the clear names, okay, foreign company, for company only this provision applicable. Civil construction they are engaged in India. So that is a turnkey power project. So approved also by central government. Total points they are given only. No need to write the theory. If they are asking the theory question, you will not write the entire answers properly. So if they are asking like these questions only, you can write the complete answer. Now remember, what is that gross amount we received in India? 60 lakh. What is that amount you received outside India? No problem. How much, 30 lakh. So total amount is nothing but what, 90 lakh. Alright. Total amount is 90 lakh. Sir, this can be taken as deduction, No. Because on the total amount we can apply the what, 10%. You can get the what, presumptive income. Can you tell me what is that? 9 lakh. And already we calculated that income. Can you tell me what is that, 1,30,000. If now total income is the 10 lakh 30,000, on that we are required to pay 35% and plus 4%. Don't compare that answer with the previous years, because previous year tax rate is what, ma? Huh? Previous year tax rate is nothing but how much amount, ma? 40%. Clear? Are you understood, Ra? They are asking the two provisions. What is the two provisions, ma? 44 triple B combined with the 44 DA. Difficult or easy? Provision if you know, easy on. Provision if you know, easy on. And one more presumptive taxation is there. That is what, bro? Amendment provision. What is that? Section 44 BBC. Can you tell me which ships, ma? Cruise ships. Or if you are not interested, please let me know. I want to go to that other place. That's why I will go. So listen carefully. Cruise ships related amendment. I am expecting these things in the next exam. Yes. What is that, ma? 44 BBC. Special provisions for computing the profits and gains of the business or profession who are doing that operation of what, ma? Cruise ships. Simple, ma. Directly, whatever that amount they are collected on that, what is the presumptive taxation rate, ma? 20%. Sir, it is not a necessary thing. You want to go for the personal tour or personal trip or family trip, etc. This is a luxury type of kind only. So that's why on that we are required to calculate the income at the rate of what, ma? 20%. Sir, any amount also, then total amount we are required to calculate the presumptive rate at the rate of what, ma? 20%. Now this is a very important point. Listen carefully. Yes. I am reading the total line, ma. Then after, once again I will tell you, but now I want to read this line. Listen carefully. Lease rentals paid by the foreign company that chooses the presumptive of tax rate under 44 BBC will be exempt from the tax in the hands of recipient company under section 10 subsection 15B if both are paying and receiving companies are foreign subsidiary of what, ma? Same holding company. This exemption is available till what, ma? 2031. Do you understood any line? Single line. So, okay, we can try now. Listen. Sir, self-study means I experienced my total self-study in CMA, CA final, law and audit reading, sir. Audit and law reading only. So now I can break down the keywords. So, sir, how I know the keywords, sir? If you are reading again, you can learn the keywords. First of all, lease rentals, ma. Paid by the one foreign company. Yes. That foreign company chooses the what, ma? Presumptive taxation provision. Now, example, ABC Limited is a foreign company. That company taken the one ship as an lease. So nothing but, so we have taken the one cruise ship as an what, ma? Lease. From which company, ma? XYZ Limited. XYZ Limited, that is an Indian company, foreign company, whatever it may be. Okay. But now, how they are declaring the income based on 44 BBC only, they are declaring the presumptive income. Now, sir, we are taken one ship on lease basis. Now we have to pay that what, ma? Lease rent. So that lease rent is income for whom, XYZ company, but that income is taxable or exempt, ma? Exempt under section 10 subsection 15B. But condition is there. These two companies are, yes, ma, subsidiaries to the one holding company. So KLM company is there. For that company, these two are acting as an what, ma? Subsidiaries, and simple words we can call it as an what, ma? Co-subsidiary. This exemption is available up to which assessment year, ma? 2030-31. This is only the provision. Sir, here you can get the 3 or 4 MCQs also. First thing, if they are declaring the presumptive income, what is the rate? What is the rate, ma? 20% of amount. And while they are paying the lease rent is exempt to that what, ma? Who are given the cruise ship on the rental basis. And so up to which assessment year this exemption is available, ma? 2030, 31. Now you can read these lines. Sorry? On what basis? I will tell you. In order to encourage the normally lease basis related. Example, I will tell you. Sir, cruise ships related, the tax evasion can be easy. Example, okay, if I am transporting the goods, directly what is that profit also we can calculate easily. In cruise ships, nothing but traveling, food and any amenities also they can provide. Easily they are trying to show the less income. They will try to show the what less income. But here minimum we are expecting that what is that income 20% of the fare. So in okay tickets they are collected 1 crore out of the 20% needs to be declared as an income. So now in order to take the exemption in the hands of this company, automatically they need to declare that which income, presumptive income. So now related companies, these two now, definitely we don't want to pay the tax on what this lease rent. That's why we can enforce the other company to declare that income based on what presumptive income. So win-win situation only. Example, okay, one more thing, these two companies are related companies only. So automatically they can send the lease rent as much as low also, no problem. At least we want to collect the tax on what presumptive income, no problem. Whatever the lease rent they received, they can take the what exemption. Nothing but in order to prevent the tax avoidance cases only we are given this point like this. So 20% minimum amount I want, on that I want to collect the tax also. So if you are declaring the based on presumptive income, I can give the one relaxation to your related party. What is that related party here? They are given the cruise ship on what lease. If you pay the lease rent, you can take that as an expenses, as well as you can, yes, whatever that amount is received as an lease rent, that is an exempt. Next. Wait, I will check that. That is only I want to check. Both are foreign subsidiaries of the same holding company. Yes, that is correct. No. These two are foreign companies only. This is also foreign company. We are not written, but this is also foreign company. And subsidiaries of same holding company. That holding company may be Indian company also. But these two subsidiary companies are what foreign companies. Holding company can be Indian company, no problem. No, lease rent you can't take. If you are following the presumptive taxation provision, you can't take any expenditure. So normally if we are declaring the presumptive income, we can't take any expenditure under that. So no problem.
Exemption.
Huh?
So they avail the exemption.
No, remember, from your point of view, you can't take the lease rent as a deduction. Suppose here we got an 1 lakh 50,000 rent we paid, but we can't take the lease rent as a deduction while computing the presumptive taxation. This is an income you have to declare. From this you can't take any deduction. But you pay lease rent na. That lease rent is income to whom? XYZ. They can claim exemption. Okay. So okay, anyhow, maybe you can get these things. Remember, these two are foreign subsidiary to that any company that may be foreign or Indian. So if in Indian only the provision having the meaning. Okay, don't think about much. Are you clear? Maybe remember 20% one thing. So exemption of an lease rentals under section 10 subsection 15B and assessment year what 20, 30, 31. Now, next. Sir, how many concepts are over? First line is totally over. Please check. First line is totally. Sorry? In that question paper. Wait. Question paper. This only you want? Ask. Remember, total income is not total income. That is an just we received after removing expenses only we can say. They are not given any information about that. Normally books of account related income how you will get after receiving that income from your services, after reducing all expenses like salaries etc., then you will get income. But here They are given the receipts only, but this related expenses only they are given. Books of accounts income means normally if you are following the present PCBP provisions, like all deductions after that you will get, but that information is not given. Na? Books of accounts related income means nothing but as per the normal provisions of Income Tax Act, you have to calculate PCBP, all other heads of income, allowable deductions, all the things, chapter 6A deductions. If you are reducing that, that is only the books of accounts income. And next, presumptive income. Here, books of accounts information is not given. So that's why this is only the final income we have to follow. Okay, how you calculated that? Just tell me. 60 lakh. Next, total. 10% 9 lakh. Okay, it is in presumptive income we have to declare. Then books of accounts income, how you calculated? But then you are asking. Books of accounts related income if they provided, so they can declare the lower than the presumptive income also. Example, books of accounts related, they are given 6 lakh only in exam. So, but you can declare this also, but supporting you have to provide what ma? 44 AB, 44 AA books, and automatically, yes, 143.3 scrutiny assessment will conduct. But they are not given these things, that's why this only I want to declare as an income. Now, yes, please remember. Yes, first line sections are over or not, ma? Totally residential status, scope of total income, presumptive taxation provision, 44 DA is over. Now, shall we start the 44C? Shall we start 44C? Important. Open the concept book 44C. Deduction of head office expenses in case of non-resident. Deduction of what ma? Head office expenses in case of non-resident. I will tell you simple example, listen. So nothing but one head office is there, that is nothing but what ma? In USA. So now one branch is located in India, that branch located in India. Now, so I think you know head office expenditures can be apportioned to the what ma? Branches. So now this head office expenses, whatever is there, but if that is an apportion to the branches, we can take the more and more in the P&L debit side as an expenses. Automatically here net profit or PCBP income is reduced to low level or not? Yes. So that's why here we are imposing the limit by using which section ma? 44C. Whatever that amount you have an expenses head office related, you can't take the total thing, sir. As per 44C limit only, you can debit to the branches. Shall we start that provision? What is the limit they are imposed? Again I am saying, deduction of head office expenditure in case of non-resident while computing the profits and gains from business or profession. What is the limit they imposed ma? Lower of the, what are the things ma? 5% of adjusted total income. So now in morning time we calculated the adjusted total income the same, no Rahu. Adjusted total income in which concept we calculated? AMT. But now this is a different computation of adjusted total income. Next one. So out of the, so actual apportionment, example ma, 100 crores is their head office expenses with respect to the branches. Now they are attributed to the branch how much ma? 10 crore. Now actual amount how much they are apportioned ma? 10 crore. So this 10 crore, or we can compute the 5% of adjusted total income. Suppose you got an 5 crore here, whichever is lower you can take it as deduction under 44C ma? 5 crore. Now here what is the meaning? I will tell you. Ma, meaning of head office expenditure is not required ma. Sir, on behalf of the branches, head office can pay the taxes also, rents also, whatever it may be. Now they can apportion. That is a different issue. But now I want to know the meaning of what ma? Adjusted total income. Are you clear? Total income before giving the effect of. That means what ma? Before giving the effect of. Yes, head office expenses, unabsorbed depreciation, capital expenditure on family planning, not revenue expenditure, only capital expenditure on family planning. Next, losses carry forward. What are the losses ma? Please don't set up the losses also. Before set off of losses, before taking the what ma? These are all the things. Please calculate total income. Generally total income means after these are all the things we can say total income. But before taking head office expenses, before taking unabsorbed depreciation, before taking the capital expenditure of family planning, before set off of the earlier year losses. What are the losses ma? Business loss, speculative business loss, long-term capital loss, Last one, ma, horses. And in one exam, they are tested the adjusted total income. They are given the what, ma, house property loss. We can set off that house property loss while calculating the adjusted total income. What are the things we can't set off, ma? Business loss, speculative, short-term capital loss. Next one, ma, losses from owning and maintaining of racehorses. Before set off of these losses only, you need to calculate total income. That is only adjusted total income. But house property loss, if anything is there, yes, you can do set off. That is question given in the one exam. Last one, ma, before removing the chapter 6A reduction. Can you tell me? If you consider before these are all the things, our total income will increase or decrease, ma? Increase, ra. What is that? Will increase. After considering these are all the things will decrease. So that's why I want to increase the adjusted total income without taking these are all the things. Can you repeat my again important only? Head office expenses, unabsorbed depreciation, capital expenditure on family plan, not revenue, capital expenditure, business losses, capital gain losses, income from other sources related, owning and maintaining of resources, and all chapter 6A reduction. So are you clear, ma? In your study material, there is a lot of mistakes in this provision. Ignore that all the things. ICMA study material having some mistakes in this provision. Please ignore that. This is a correct thing. I am taken this from the CA materials. Okay. Now, question number. Please, just last day. Illustration 8. Please read. All of you, please read with your on your own only. Read. I want to see. Net result of the business carried on by the branch of foreign company in India is loss after debiting the head office expenditure 60 lakh. Remember, after head office expenses 60 lakh, so loss how much, ma? Net profit or loss, ma? Loss they declare. But okay, just I am writing this side only. What is the loss, ma? 30 lakh. So this treatment is correct or incorrect, ma? Incorrect, because we want to restrict this amount with this section 44C. Now, so they are asking the compute the income of branch. So we can compute the income of branch. First we can calculate what is the limit we can allow under 44C. First we can calculate 5% of ATI, adjusted total income, or what is that amount they are allocated to the branch, ma? 60 lakh. So calculate adjusted total income, ma? Total income before effect of head office expenditure, before effect of all the things we discussed already. Yes, but in this question they are given the only head office expenses. So ultimately first we have loss, ma. Ultimately we have a loss. So please add back that head office expenditure, then we can get the adjusted total income. Loss how much, ma? 30 lakh. So now please add the head office expenses how much, ma? 60 lakh. This is only 30 lakh adjusted total income. We have to calculate the total income before giving the effect of all the things. But in this question they are given only what, ma? Head office expenditure only. Before considering the head office expenditure, after considering the head office expenditure, I got what, ma? Loss. But if I am not considering the head office expenditure, my total income will be how much, ma? 30 lakh. On 30 lakh, please calculate 5%. 1 lakh 50,000. 1 lakh 50 only. So now whichever is lower, ma? 1 lakh 50,000. So that means now, yes, you can give the deduction only 1 lakh 50,000. So that means here, what is that wrong amount, ma? 60 lakh is wrong. Automatically, here you will get what, ma? 30 lakh. So that means 30 lakh minus what we can remove, ma? 1 lakh 50,000. Before considering the head office expenditure, what is the total income? 30 lakh. Head office expenditure, what we can remove as per 44C? 1 lakh 50,000. So that means from these, if we are removing the 1 lakh 50,000, yes, you will get the what, ma? 28 lakh 50,000. Same question we have in our workbook also. I think second or first question you can see. But numbers are changed, right? Sir, definitely it is a question pending for the, yes sir, last 2 to 3 attempts, sir. But remember, I will show you one workbook question, ma. You have to solve that. Non-resident workbook, please open. Yes, if you have workbook, please open the non-resident chapter. I will give you that question also. Yes, ma. Please take, this is only the question given. Similar question we are already done, ma. So now 50 lakh loss is there. After considering head office expenses of what ma? 100 lakh. Please calculate adjusted total income ma? 50 lakh you will get. So you can calculate directly, but what is the point I want to give? Question number 7 is a model question paper related. In this, can you tell me? I think house property loss is there ma? This you can reduce. Yes, house property loss is there na? This you can reduce while computing the what ma? Adjusted total income. Remaining things you can't. So already detailedly I am given the total things. Yes, you can calculate. Directly they are asking what is the total income of the branch after adjusting the deduction under section 44C. 44C means automatically you have to remember head office expenditures deduction in the hands of branches. Clear? No. Yes, quickly we have to do that remaining also. Yes, shall we start the NRI provisions ma? Most important. Mostly they are giving the questions from this concept non-resident what ma? Indian. NRI. This is a separate chapter in the Income Tax Act 1961. Chapter means, so we have a different provision. Taxation of what ma? NRI. Non-resident individual. So section 115C to 115I. If you are ready, then I will start. After that NRI provision, I will go with the what ma? This also. Linking provisions. Yes. Sir, many students are asking, sir, capital gain we have to read. No need to read entire CMA enter capital gain, sir. But business restructuring reconstruction is capital gain. But again, non-resident related capital gain, we have only one question in our study material that is only given in the June exam for 7 marks. In this concept, we have only one question in study material that is only given in 7 marks in June attempt. Okay. So first prepare that workbook questions. I will release that important questions, sir. But okay, you know, if I am releasing important question, I haven't fear. What is that fear? They will read some part of that important questions only out of that I am releasing. So that's why many students are waiting, I know. But if any student follow the revision series, they know what is that important, what is an unimportant also, they can know, to be honest. But if I am selecting the questions, it will take time. Okay, if I don't have any mindset, now directly I can select the questions by using the random. I can give a list. Students can believe easily. But I don't want to do that thing. I have to invest time. Trends also. Okay, I know trends, but I want to check that all the questions are. So then after I need to prepare one PDF. If number of questions are more, now I want to delete some questions also. If questions are less, I want to add more questions also. That needs to take a time. So I haven't only that free time in a night or any other thing only. The reason after revision classes, I have an own activities. I want to start up an institute. For that, I want to do the background activities also. And I want to communicate with the many faculties or students or etc. That's why I don't have a free time. Definitely I will release. But okay, in this week, next week, sorry. So Sunday to nothing but next Saturday is there. On that I will release. But up to that, please bear with me. Now, shall we start the non-resident taxation provisions? Okay, please open NRI provisions. Important. So nearly I want to take the 20 to 30 minutes for these sections only. Please listen carefully. Important. Directly you can get the questions also. Section 115C2, yes, 115I, provisions in case of non-resident Indian. What do you mean by the NRI first? NRI means is an individual, is a citizen of what ma? India, or person of what ma? Indian origin, who is not a resident. Example, non-resident ma, and he is an individual. Individual may be Indian citizen. Next ma, person of Indian origin. Then we can call that person as what ma? NRI. Non-resident individual or non-resident Indian? Non-resident Indian. Are you clear? Non-resident Indian. So Indian means nothing but Indian citizen or person of Indian origin. So okay, for this person, we are given some benefits also while taxing the total income of him. So what is that benefits? I will tell you. Now, section 115C I am discussing. Now I am discussing the which section ma? Section 115C. What is that 115C? I will tell you. If any non-resident having these two types of incomes, on these two incomes, special tax rates will apply. What are the two incomes ma? Income from investment. Or income from investment means nothing but what ma? If you are doing some investment, automatically maybe you will receive the dividend amount or you will receive the interest amount. or if you are selling that investment, maybe if you get what ma long-term capital gain, for these two incomes only, we are given the special tax rates under these sections. But sir, investment needs to be made in which asset ma? Foreign exchange asset. As well as you have to sold the which asset for getting the long-term capital gain? Foreign exchange asset. What do you mean by the foreign exchange asset? I will tell you. It is a specified asset acquired or purchased in which currency ma? Foreign currency. What are the assets ma? Specified asset means shares of Indian company, debentures issued by the Indian company, but remember which is not a private company. So shares na any company okay, but debentures yes ma issued by Indian company, not a private company. Deposits with the Indian company, which is not in what ma? Private company. Any security of central government, any notified asset, these are all can be called as what ma? Foreign exchange asset. What are the foreign exchange assets ma? Sir, one non-resident invested in the shares of Indian company, that is a foreign exchange asset only. But he needs to invest that amount in the which currency ma? Foreign currency. So debentures issued by the Indian company, public or private? Public. Public akka. Okay. Now, deposits with the Indian company, that Indian company is a public company. Next, securities of central government, notified asset. Next, investment income means any income derived from the foreign exchange asset. Capital gain means, I think you know, if these are all assets are long-term capital asset, if you are transferring that, you will get what ma? Long-term capital gain. You will get what ma? Long-term capital gain. Are you clear? So now, please listen this concept. I told already na. So non-resident means it is a residential status for all. If individual is a non-resident, if that individual is an Indian citizen or person of Indian origin, we can call it as an NRI. So example, one person settled in USA. Okay, your relative only. He settled in USA. So he is an individual or not? Yes. But he is an Indian citizen and person of Indian origin. That person we can call it as an NRI. Non-resident Indian. This status should be given only for whom ma? Individual only. Again I am saying ma? Foreign company, anything also, if you are identifying residential status, you will get an answer as a non-resident. Individual, if he is an Indian citizen, person of Indian origin, if you got a residential status non-resident, then we can call that person as an NRI, non-resident Indian. So the status can be given only for whom? Individual. So I think I will highlight this point also. For an individual only we can. So that's why we are given some relaxations for with respect to the which incomes ma? Two incomes only. What are the two incomes? Investment income, long-term capital gain income, which is an arises from the foreign exchange asset. Now, what is the rate we are going to give? Rate I will tell you in the next section 115E, but what is that provision? From the investment income, there is no deduction ma. Investment income from that there is no deduction. And there is no chapter 6A deductions also. Why sir? Sir, I am given the concessional tax rates, so that's why I am not allowing any deductions, including chapter 6A deduction. Flat rate, what is that flat rate ma? 20%. Generally, non-resident individual, he is an Indian citizen or person of Indian origin. For him, what is the tax rate ma? Slab rates if you are following also, 30% can be applicable. But now they are asking the how much ma? Just 20 only. Clear? If that is a capital gain, if transfer before this date 10%, if transfer on or after this date is nothing but what ma? 12.5, because it is an LTCZ. Other incomes are always what are normal tax rate. Many students are thinking that for the total income special tax rates are not available, only for these two income special tax rate, remaining incomes are taxable at what ma? Normal tax rates only. Are you clear? Now, if you calculated the capital gain, from that we can give the what ma? Exemption also. If you got a long-term capital gain, that is a gross long-term capital gain, from this we can get one exemption also. What is that exemption? This is an important. So NRI, that means what ma? Non-resident Indian. Yes, he transferred the specified foreign exchange asset. So that's why we can treat it as an what ma? Transferred asset or old asset. So that's why it is a long-term capital asset. If he transferred, he will get what ma? Long-term capital gain. Out of that proceeds, Within 6 months, if we purchase it, that same asset, yes, but here is one more asset is added. Ma. What is that, ma? NSC level 6 and level 7 certificate if you purchase it also, okay. So foreign exchange asset we discussed as of now, that is transfer. On that we are getting the long-term capital gain. But within 6 months of the transfer, if you are invested in this new asset, you will get which exemption, ma? 115F exemption. So amount of an exemption is available. Long-term capital gain amount. Now remember it is similar to our section 54F exemption. Similar to our section 54F exemption. I will tell you. My net consideration is nothing but what, ma? Here I want to compute the long-term capital gain. How we can compute the long-term capital gain, ma? Gross consideration minus transfer expenses. We can get what, ma? Net consideration minus cost of acquisition. Yes, all the things you can remove. If indexation is available, you can remove, because if you are transferred before that date, indexation available. For non-resident, there is no indexation. Okay. Now minus this and what, ma? Gross long-term capital gain. From this we can reduce the what, ma? Section 115F. If you are invested the net consideration in the within 6 months in this foreign exchange asset again. But remember, if you are invested the entire net consideration, ma? Entire net consideration if you are invested in which asset, ma? New asset. What is that exemption you will get, ma? 100% of this gross long-term capital gain will be exempt. Sir, if you are invested just 50% of the what, ma? Net consideration. So this is only net consideration is, yes, ma, is there, and your investment. If you invested 100%, this ratio will be what, ma? 100%. If you invested 50%, that means out of your long-term capital gain, how much proportion is exempted is depends upon net consideration to investment ratio. I invested 10% of my net consideration only. Your ratio will become what, ma? 10%. Out of your long-term capital gain also, how much will be exempt, ma? 10%. So many sections are saying, so directly investment amount, gross capital gain, whichever is lower. Okay, gross long-term capital gain or investment we can take. But here investment should be rooted from which consideration, ma? Net consideration. That's why if you are invested entire net consideration in a new asset, then ratio will become what, ma? 100%. Or otherwise the ratio will be changed in proportion to that investment to the what, ma? Net consideration. Clear? We can do some problems also directly, the remaining things normally. But one point is there important. Sir, here I am given the huge relaxation, ma. Even though you got a long-term capital gain also, if you purchase the same new asset, I am given the exemption, but you have to hold that new asset for how many years, ma? 3 years. If you are transferred that asset within 3 years, already given exemption, now it isn't taxable in the year of what, ma? Violation. That points are enough, ma. Now we can discuss some problems. Before, okay, shall we start problems, sir? Yes, we can try, ma. Yes, shall we start? Illustration 11 from the workbook. My exam, they will give you Ramesh as a non-resident Indian. Then we can try to remember, okay, NRI provisions related, they're asking. Non-resident chapter only. Non-resident Indian. Okay. High chances of asking that. Definitely you can get NRI concept in your exam. Income from house property is there, ma. Super. Can you tell me income from house property by using normal tax rates or special tax rates given? Normal tax rates only. Dividend from the Indian companies. 20%. Because it is an investment income. Okay. Next, ma, interest received from the debentures of an Indian company. Can you tell me it is also what, ma? 20%. Investment related income. But can I reduce the expenditure, ma? No. Clearly they are given in this provision. Directly we are charging at a 20%. We are not going to give any deduction. So that is an investment income related point. Next, long-term capital gain we got, ma. Sale on debentures of that Indian company. Okay, subscribed in foreign currency. Now can you tell me before 23/7/2024 or after, ma? After. So now they are given the yes sale consideration minus transfer expenses you can take and cost of acquisition also. Yes, you will get the what ma long term capital gain. Okay, you can calculate the long term capital gain on that. What is the rate is applicable ma? Yes, 12.5%. Super. How you know these are all the things also? I don't know. Ramesh opted the provision for the chapter 12A. Ma, remember this chapter 12A is a separate chapter given in income tax for the non-resident Indian. It is an optional. Sir, I don't want to follow that NRI provision, sir. I want to follow the normal provision. You can follow. But SSC followed that whatever the provisions given in the 115C to 115I. Now, what is the tax liability, ma? So first, income from house property, how much, ma? 3 lakh. Capital gain, if you calculated, you will get 2,42,000 ma. Try that. So simple ma. Okay. Sale consideration minus transfer expenses minus cost of acquisition, you will get what ma? 2,42,000. Dividend income is there and nothing but what ma? Interest on debentures. Can you allow the expenses? No. That is nothing but investment income related. So total income 7,42,000. You got 7,42,000. Yes. Now tax liability ma. Remember. Long-term capital gain related, what is the rate we have to apply? 12.5. Debenture related, what is the rate we have to apply? 20%. So now, I am highlighting ma, capital gain is over, 2,42,000. Debentures related is nothing but what ma? 1,20,000 related. How much ma? 20%. What about the dividend from Indian companies? This is an normal tax rates only. I will tell you the reason. Because here they are clearly given purchased in foreign currency. That's why it is a foreign exchange asset. Here they are not mentioned anything as an what ma? Purchased in foreign currency, etc. That's why it is not a foreign exchange asset. Clear? Now, remaining income ma, out of 7,42,000, what is that amount we have? So already these two things if you are added, special tax rate taxable income how much ma? These two things if you are added, special tax rate taxable incomes will be over, then balance will be 3,80,000. On this we can apply the normal tax rate ma. SSC is a non-resident Indian, so yes you can follow the normal slab rates and you can calculate the tax liability. At last you can add the education cess. Are you clear? So please add these two things and tell me what is that amount you will get ma. Please use that your calculator definitely will stop in your exam. Total 3,63,000. It is a balancing figure. It is liable to tax rate what ma? Normal tax rate. Clear ma? Sir, it's my mistake only. I haven't phone. Okay, hereafter I will use that. No problem. Are you clear ma up to now? If they are not mentioned, that is a normal asset only. We can't treat it as a foreign exchange asset. Why? Clearly they are mentioned. If that is purchased in which currency ma? Yes, clearly they mention that is acquired or purchased or subscribed in convertible foreign exchange. Then only that can be treated as foreign exchange asset.
But if generally they are given,
they will give you the clarity on the exam. Definitely they will give you. Otherwise you will get marks. Now, next concept ma, listen carefully. Doubt
Why sir they were taking old regime?
They are taken old regime ma. Amma one thing, normally in your exam, if they are not mentioned any tax regime for individual HUF, AOP, BOI, AJP, default tax regime only you have to follow. Okay. So default, that means 115 BS. Otherwise, okay, you can take that assumption and you can follow the old also. In last attempt, they are taken the same thing, ma. They are given the both answers. Don't worry. Here, I think you are asking the doubt, sir, balance amount, they are following the old regime rates, I think. No problem. Huh? They are given, given akka. Okay, if they are given that you have to follow, otherwise you can take assumption, but suitable assumption is default tax regime only. But in last attempt, they are not given for one question assumptions ma. So that's why we are followed that. I will show you that question. This is only ma. For this question, they are not mentioned anything. Advanced tax and interest related ma. So they are not mentioned anything. They are given the suggested answer in both ways. If we opted 115 BAC and if we opted normal. But don't do the total things. You can follow one thing and you can write your assumption. But suitable assumption is what? 115 BAC default tax regime is the best thing. But in exam, definitely they will give you clarity. Many times in many classes I am saying, they will give you a don't ask me. But still students are asking the same though. And to be honest, I will say one thing. Many students, they don't know which rates are default one, which rates are optional one. You have to accept this fact. Maybe you know. Remaining students, they don't know what is a default one, what is an optional one. Many students are asking, sir, partnership form, what is the second regime? Okay, you can create a next finance act by way of becoming finance minister. Okay, only the regimes are available for whom? Individual, HUF, AOP, BOA, AJP. Next, domestic company. Next for cooperative society. Now, next concept, ma. This is only the concept important, and we can discuss one more NRI question relating to this, ma. Remember, sir, if any non-resident is transferring his shares or debentures, then definitely shares or debentures are what, ma? Capital asset. And if he transfer, he required to calculate capital gain. How to calculate the capital gain? You know formats already. But I want to know one thing, ma. Sir, for non-resident, calculation of capital gain in foreign currency is better or in rupees is better? Foreign currency is better. So that's why separately they are given the one proviso. 48 is nothing but what, ma? Non-depreciable, because shares and debentures are what, ma? Non-depreciable only. We can follow 48 only, but we are given the proviso 1. Yes, some exceptions we are saying. What are that? I will tell you. First, non-resident related capital gain, how we are going to compute, ma? In foreign currency. After calculating that the capital gain, that may be long term or short term, if you got one capital gain amount in foreign currency, now you have to convert into Indian currency. What is the reason? You are required to pay the tax in India. So that's why please calculate that foreign currency capital gain into Indian currency. Computation totally should be in foreign currency. Final capital gain you got foreign currency, na, that converted into what, ma? Indian currency. This conversion given in the which rule, ma? Rule 115A. Rule 115A. Now, remember, SSE is a non-resident including foreign company. What is the asset transfer, ma? Shares or debentures. Now, how we are purchasing this asset, ma? By way of purchase or by way of reinvestment. How to calculate the capital gain? I am given that all the things in a notes. Listen carefully. Section 50, you know, depreciable related. Section 48 is non-depreciable. We are following that. What is the rule saying? Sale consideration. Definitely, he is an investing in a which company, ma? Indian company. So if he sold that, he will receive that amount in rupees or foreign currency, rupees only. But that should be converting into foreign currency by using the telegraphic transfer buying rate, telegraphic transfer selling rate. So average you have to take. Buying rate they will give you, selling rate also they will give you. On which date, ma? Date of transfer. Transfer date rates they will give you. By using that average of that rates only, you can convert the rupees to which currency, ma? Foreign currency. Finally, we are computing all the things in which currency? Foreign. Transfer expenses if they are given, that is also transfer expenses in India. How we are going to pay, ma? Rupees only. But convert that rupees into foreign currency by using the telegraphic transfer buying rate, selling rate average on the date of transfer. If you are reducing these two, if you are reducing the transfer expenses, you will get what, ma? Net consideration. Yes, minus cost of acquisition, you have to reduce. Cost of acquisition in India, how to pay the money, ma? In rupees or in foreign currency you can pay. In rupees only you can pay to that Indian companies. That's why that rupees needs to be converted into foreign currency by using the average of telegraphic buying rate, selling rate average on the date of what, ma? Acquisition. Now finally you will get the capital gain in which currency? Foreign currency. But in India, can we pay the tax in the foreign currency terms, ma? No. So that's why please convert that capital gain calculated in foreign currency into Indian currency by using the TTBR buying rate. Ma, telegraphic transfer buying and selling rate, bankers rate. Simply bankers will give you these rates. Every day these rates will be changed, certain amount of deviations only. So now buying rate on the date of transfer, you will get capital gain amount. Shall we discuss one question, comprehensive question on this? Now, sir, it is an previously examination question, I think. We have in our workbook, please open the question number 14. Around 7 we can conclude the session. How much extent we are going, all the things I will try to cover. Till 7 we can continue, ma. So don't worry, it will be completed total what I haven't planned to discuss all the things in non-resident chapter, I will try to cover. Don't think about it, listen carefully. Now, Dravid is an 45 years non-resident, but he is an what, ma? Indian citizen. Can you tell me what is that, ma, this one? Non-resident, but he is an Indian citizen. That's why NRI. What is that, Ra? NRI. Okay. Next lines, ma. On 11/4/2022, he bought how many equity shares from an listed Indian company, ma? 10,000. Each one how much amount, ma? Rupees 5 per share. US dollar. US dollar 5 per share. Dravid sold all the shares during the previous year 24-25. Each share he is selling for the what, ma? 770. Out of the sale proceeds, he invested in the another listed company EFG for how much amount, ma? 500%. I think you have to observe. Non-resident, he is Indian, he is selling the one asset and he purchasing the one more. So that's why he can get the exemption under which section, ma? 115F. Non-resident is selling the shares of an Indian company. So that's why he can calculate capital gain. In that process, he purchased the one more listed company share. That's why he can get the what, ma? 115F exemption. So now one more point, ma. He subscribed the RECL bonds also. Sir, if he subscribed RECL bonds, which exemption we can try to take, ma? 54EC, but here 54EC is not available, ma. 54EC exemption if you want to take, transferred asset is long-term capital asset, that is a land or building. With that proceed, if you are invested NHAI bonds or RECL bonds, then you will get the which exemption, ma? 54EC. But now, what is a transferred asset, ma? Equity shares, long-term equity shares. With the help you purchase it, that's why 54EC is not available. Many students are taking that 54EC exemption also, that is wrong. Transferred asset is land or building or equity shares in this question, ma? Equity shares of this company. Now, they are asking the capital gain, ma? How to calculate capital gain here? We have to follow provision 1 to section 48 as well as rule 115A. Because first calculate the capital gain in foreign currency. Finally, you got in foreign currency capital gain. You have to convert into Indian rupees. That procedure, and they are given the 115F exemption in the same question. Shall we start this, ma? Now, sale consideration. How much, ma? They are directly given in rupees, ma. Please calculate in rupees how much you will get, ma? 10,000 into 770 rupees. But we have to convert into foreign currency. What is the rate we have to use for converting into the foreign currency? Average of telegraphic transfer, buying rate and selling rate on the date of what, ma? Transfer. I think it will be 77. It is only date of transfer. Can you convert, ma? The total amount of sale consideration is this one divided by 77. You will get in dollars how much, ma? 1 lakh. So transfer expenses mentioned in the question are no. Transfer expenses not given. This is only net sale consideration. Cost of acquisition, unfortunately they are given in the foreign currency only, no problem. 10,000 into 5 rupees. How much, ma? 50,000. So there is no indexation for the non-resident, ma. That's why it is a long-term capital gain. Now, long-term capital gain you got in dollar. Now we have to convert into Indian rupees by using telegraphic transfer buying rate as on the date of what, ma? Transfer. What is a telegraphic transfer buying rate as on the date of transfer, ma? 76. Please apply that and you will get the what, ma? In rupees. Now, Exemption we can calculate, ma. What is the net consideration you got, ma? Please convert the net consideration into rupees, ma. I think you will get 77 lakh. If you are investing the 77 lakh net consideration, okay, I will get the how much amount exempt, ma? 38 lakh also I will give exemption. Remember, my investment, if it is proportion to the net consideration, I will give the exemption. No. But what is that amount invested, ma? Yes, can you tell me how much amount is invested, ma? 11 lakh 550, 11,550 shares into 500. What is that amount invested in that Indian company shares? How much, ma? 11,550 into 500. How much? 57 lakh. We are invested this amount, but our net consideration that proportionate we can take, yes, ma, on this 38 lakh. Sir, if I am invested entire 77 lakh, what is the percentage, ma? 100%. 38 lakh I will get exemption. But here I invested only certain extent. So that's why this will be minus 28 lakh 50,000 only I will get exemption. So 54 EC exemption is not available because the transferred asset is not a land or building or both. Are you clear this question, ma? Section 48, Proviso 1 under Rule 115A along with the non-resident related exemption totally tested in one question for 7 marks. Clear? Sir, in exam always think net consideration is matched with the total investment. Sir, if I am invested the 77 lakh, what is the exemption I can get in this place, ma? 38. But here just I invested the 57 lakh. So what is the percentage of that only I will get exemption, ma? You can calculate easy. Are you clear up to now? Now, how many concepts are over till now, ma? If you are observing that, yes, ma? Residential status, scope of total income, presumptive taxation, 44DA, 44C, and I think 115A, one section is over. What is that? Section 115A, subsection 1, class B is over. What is that, ma? Royalty income taxability special tax rate. What is that, ma? 20% without PE if they are providing the services. Next, NRI provisions also over. Next, capital gain in case of what, ma? Non-resident, along with the rule 115A also over. Now, we can discuss whatever that question extra they are given as a non-resident, we can try to sum up the total things, ma. Now, if any new concepts or new questions, if they are framed also, don't think anything extra, just read it out the total question in that exam. Definitely you can crack it. So you know that concepts, automatically you can write the provision. So please think in that way only. If they are given the new format of questions, means nothing but you can't think about this is an out of syllabus, this is not at all covered. Don't think that. Okay. Now, few more questions we can solve now. We can try to solve a few more questions. Non-resident, this one over. All are over, ma, from workbook. No. So if you are given the permission, na, then non-resident NRI related, I will solve one more question, ma. I don't know. Yesterday, many students are doing that chart in the Telegram group about this question only. I don't know. I think if you verified the chart also previously, they are using the chart GPT. They are copied and pasted nearly 20 to 30 messages in the afternoon time. On that occasion, I haven't thought of blocking the total messages. Only admin, if an admin given the messages, that's okay. The remaining experts are doing the chat GPT. They are saying the multiple answers. That's why students can get some confusion also. So that's why, okay. But if they are open the soft copy of this material or hard copy of material, we have an answer. But instead of that, they are doing that lot of conversations only. Okay, no problem. We can discuss this question. But simple only. But complete answer cannot be done by the every student. I will tell you. Wesley is a non-resident, 56 years of age. Sir, how to identify this question is an NRI question, sir. Non-resident and individual, it's okay. But here they are given the chapter 12A. Remember, that is in chapter 12A, means he opted the NRI provisions. Okay. What are the incomes we have? I will tell you. Sir, interest from the deposits with the limited companies. Here we have to take one assumption. Ma. Limited means here public. If you are taken private, na answer cannot be matched. In exam, definitely they will try to rectify. Next time they will give you public, not private. Because deposits must be made in which company if you want to call it as a foreign exchange asset, ma? Not a private. That's why you have to assume it as a public. Now, second one. STT. So, okay, what is the tax rate we can apply on this, ma? 20%. Investment income related, 20%. Investment income related, what is the percentage we can apply, ma? 20%. Now, short-term capital gain is arises. On that, we can apply the what, ma? Special tax rate. Remember. Sir, we have a long-term capital gain. Okay, again we can read, ma. Another one we can read. Long-term capital gain we got. That is from the transfer of specified foreign exchange asset. So that is a long-term capital gain. On this transfer date is given. That is before 23/7/2024. So that's why what is the rate we can apply, ma? 10%. So this expenditure can we take as a deduction? Yes. Expenditure wholly incurred. That means we can take it as a deduction. It isn't taxable. But remaining incomes, what is the rate of tax we have to apply? Normal tax rate. Normal tax rate. But out of that, if any special tax rate taxable incomes is there, we have to apply that what, ma? Special tax rate. So many students are asking that, sir, remaining income all are normal. If I am having gambling income also, you will collect the tax at the rate of normal. Are you clear? So remaining incomes normal means what, ma? Special tax rates always applied. Remaining incomes taxable at what, ma? Normal. Now please check. Deposits taxable with a limited, deposits with the what, ma? Limited companies. Wait. Okay. So they are not given that what, ma? Foreign exchange related point. So that's why what is the tax rate, ma? Normal tax rate. So that is a point you have to consider. Next, it is taxable at what, ma? 111A. Short-term capital gain. That the company shares is listed company. That's why which provision will attract, ma? 111A rates. Sir, but 111A rate before 23/7/2024 is what, ma? 15%. And it is on what tax rate, ma? Normal tax rate. Why, ma? It is not a foreign exchange asset. Normal tax rate. Now, next one, ma? Investment in shares of public limited companies. Then what is the rate we can apply for this, ma? Yes. What is it? Okay. This is given for the what, ma? Exemption purpose. This is given for the what, ma? Exemption. Now I will tell you. So these two things if over, then transfer expenses you can remove, ma. This is what amount, ma? Gross long-term capital gain. Within 6 months, if you are invested again in that what, ma? Investment is done, not investment income. It is again you are invested in these companies for getting that what, ma? Exemption. Can you tell me how much exemption we can get, ma? 2,10,000. How much amount of an exemption you can get, ma? 2,10,000. Now, can you tell me what is a taxable rate here? I think 115E means nothing but what rate, ma? 10%. Before 23/7/2024, that one 10%. Now, can you tell me what is the total income we got, ma? What is the total income we got? Yes, 2,10,000, 4,60,000, 4,40,000, total 11 lakh. Out of that, yes, you can apply the, yes, ma, you can apply the, these two things are taxable. I think what one? Only one thing is taxable at what, ma? Normal tax rate. That is below the basic exemption limit or not? Yes, that's why what, ma? 0. Remaining on this 4,60,000, what is the rate we can apply, ma? 15%. Because transfer date is before 23/7/2024. So that's why what is the rate, ma? 15%. Next, on the balance 4,40,000, 10%. Finally, you will get what, ma? 1,13,000. Yes, you will get the what, ma? 1,17,520. Sir, again I am repeating this question. Listen carefully. But incomplete information is provided. But they can give this again same question in the exams also. Yes. So how you can identify whether this question is an NRI? Based on chapter 12 only you can identify. Chapter 12. Now, sir, investment income but not from the foreign exchange asset ma, because they are not invested in that foreign currency. So that's why it is a normal income. It is taxable at what ma? Normal tax rates. Now short term capital gain, it is not a special tax, sorry, it is not a NRI covered tax rate. Only NRI rates are given for the what ma? Two things: investment income, long term capital, not for short term capital gain. But it is a short term capital gain under section what ma? Triple 1A, taxing at the rate of what ma? 15%, because transfer date before 23/7/2024. On or after we can apply what ma? 20%. Next, long term capital gain we got, sir, but they are given the long term capital gain amount. Yes, transfer of foreign exchange. So the long term capital gain is a computed figure they are saying, but not deducted. Transfer expenses not deducted. Now you can deduct the transfer expenses from the capital gain amount. From that, we are invested some amount in that what ma? Public company shares in India. Now you are eligible to take the what ma? Exemption. Finally, you will get the capital gain. How much ma? 4,40,000. But a long term capital gain amount is taxed at the rate of what ma? 20. Sorry. Taxed at the rate of what ma? Transfer date we have to check. Transfer date, if they are given as an before 23/7/2024, what is the rate ma? 10%. Now you can take the three incomes are there. One is normal tax rate, one is a special tax rate, one is an NRI provisions tax rate. What is that ma? 10%. So this is completely exempt because below basic exemption limit. On this, please calculate 15% tax. On this, you can calculate 10% tax. Totally, for that, you can add the what ma? Education cess. Clear? These are provisions they are given. If you need to identify what is that NRI provisions taxable income and what is the rates. Remaining rates, remaining incomes, out of that, if special incomes are there, you have to apply that what ma? Special tax rates only. So this is short term capital gain. Generally will tax rate what rate ma? Special tax rate. That's why you can take. Remaining or what ma? Normal tax rate. Are you clear? So these are only the provisions they are going to test in a repeated manner ma. But now I want to take the few more sections. One more, 2 or 3 sections I will take. Important for exam point of view. Yes.
Long-term capital gain, they are limiting to that proportion amount of investment.
But here they are not given that information about net consideration. How you can propose net? You are asking correct doubt only ma. Sir, he is asking, sir, investment amount as per that section, it should be restricted to proportion to net consideration. But in this question, they are given the net consideration. They are given directly long-term capital gain. Out of that long-term capital gain, transfer expenses not deducted. That's why we are deducting. But here, there is no information about the net consideration. So that's why we are given the total amount as an exemption. There is no way. Okay, are you clear ma? This is only what doubt. Here we are unable to calculate the net consideration. So that's why whatever that amount is invested, we are given the total amount as an exemption. Yes ma? Just 10 minutes only. 10 minutes. Within 10 minutes, we can complete the two knowing provisions only. All you know already. So these provisions we can discuss and we can take a break also. Remember ma? Ma, all the provision maybe you can take as a risk, special tax rate, taxable income, but last two you have to refer. So first in this table I given the 115A subsection 1 class B with respect to that royalty income or fees for technical services income we discussed. But in the next table I want to tell you the last two provision. It is a very important. Listen carefully. Within 10 minutes we can conclude ma. Example. Yes ma. Non-resident sports person, non-resident entertainer being a foreign citizen. Sir, if you receiving any income in India by participating in games or by way of doing sponsorships or promotions, or if you doing that, if you writing that any articles in newspapers. Example, sir, foreign players are coming to India. They are foreign citizens as well as non-resident. Or non-resident entertainer means what ma? So singer or magician or any person also, they are entertaining the crowd. So if they are receiving this type of incomes from India, if they are receiving that these three type means what ma? Participation related income, sponsorships or advertisement related incomes. Next one ma? Contribution related to articles, journals or any blogs if you are written, then you will get some amount. So these are all the things are taxable at the rate of what rate, ma? 20%. Remember, match referee is not considered as a sport person. Umpire, match referee, these are all are not treated as a sport person. Now, remember, ma, sir, is there any deductions we can provide? No. We can't provide any chapter 6A deductions also. Indexation benefit also is not applicable. Why? Here we are not calculating capital gain. Why? No need to think about the what, ma? Indexation. Remember, return of income is not required to file. This is important. Already, example, ma. So one foreign player come to India, we are given money. At the time of giving the money, we are already deducted the TDS under section 194E. Already with respect to this income, we deducted the TDS under section 194E. He is not having any other income also. So that's why no need to file the what, ma? Return of income. If total income consists of such income only, and already if tax already deducted, then no need to file the what, ma? Return of income. What is the section number? 115 BBA 1A. Next 1B, ma. It is a sports person or entertainer related. It is a sports association. Example, sir, foreign players as a team come to India. Now, yes, sir, our association needs to pay some amount to the foreign association. Now, that income to that whom non-resident sports association. Example, England cricket players are coming to India for playing that one series. Now, Indian Cricket Board needs to pay the some amount to that what, ma? England Cricket Board. So that amount is taxed in the hands of that England Cricket Board at the rate of what, ma? 20%. That is a non-resident sports association required to pay the tax in India at the rate of 20%. While we are paying that amount also, we are required to deduct the TDS under 194E 20%. Now, there is no chapter 6A deduction, there is no deductions, indexation not applicable, and return of income is also not required if already tax deducted. This is a very important. No? Now, immediately, I want to open the 194E TDS provision. What is that, ma? 194E. TDS on payment made to the non-resident person, non-resident sports association. Already you know how to pay the tax in the hands of this person, ma? 115 BBA subsection 1 class A, non-resident sport person or entertainer. 115 BBA subsection A class B, non-resident sports association. Can you tell me? TDS required to be deducted by the payer who are paying the money at the rate of 20% plus surcharge plus health and education SESMA. If surcharge is not applicable, we are required to deduct 20 plus 4%, that is an 20.8 threshold limit is nil. Even you are paying the 1 lakh also, you are required to deduct the TDS. Surcharge also, sir, I am paying the 500 crores amount. So now surcharge also you have to apply. Just 3 lakhs we are paying, no applicability of surcharge. That's why 20 plus 4%, that is an 20.8%. Shall we do one problem? Okay. Sir, which provisions are linked, ma? If any income arises to this non-resident port person or non-resident sports association, that related TDS provision is 194E. So now, after that question, maybe you will get certain clarity. Now, I will open the one question, ma. Please, this question we have in our workbook also, but we can discuss from here, ma. 7-mark question. I don't know why they are trying to give this type of questions also. After this question, you can ask. After this question, you can ask. If you haven't doubt of forgetting, you can write in the last page. Maybe in this question, you will get a clarity. John Smith is a non-resident football player. He is a non-citizen of India. That means foreign citizen. He participated in an exhibition match in Mumbai. He received the following payments, prize money, and he is receiving some amount from the sports magazine also. He contributed some articles. So that's why he received that amount. And next, he appeared in some commercials. So that means he is doing some promotions related to one drink also. What is that amount totally he received? 18 lakh plus 1 lakh 50,000 and 3 lakh 50,000. Yes, total, ma. Please calculate and tell me. Ma? 23 lakh he received. On this 23 lakh, what is the tax he is required to pay, ma? 20% plus education cess, that is totally 20.8%. There is no expenses can be available for him. What is the provision he can apply, ma? Section 115 BBA subsection 1 class A. There is no other expenses, ma. He is a non-resident for tax purposes only. Sir, they are asking a question, state whether he is required to file the return of income or not. We need to write it down. If TDS already deducted under section 194E and he is not having the other income, then no need to file the return of income. Please calculate the tax on this ma. So under there is no deduction with respect to that expenditure. You have to write it as a note point. And return of income is not required. You only having this income and tax already deducted on this income. Now you can ask. Wait.
He can go to this country and pay this.
Sorry, what you are asking? So non-resident.
Here we get the tax pay to the government. He goes to this country. He gets paid this tax.
As per the tax laws, they can get double taxation relief. Because now we are collecting the tax from the foreign citizen based on source rule because he earned that amount in India. But now their country will collect the tax based on resident rule. So in his country, he can claim the relief as per their tax laws. But in our country, we are given the relief by using section 1991 as per the DTA chapter. Like that, as per their tax laws, they can get the relief. Are you clear, Maptuna? So that's end with the non-resident chapter. Almost we discussed the total things. But if you want to read the tax related, TDS related, all the things are summarized in a tabular format. You can try. If you are sparing just 1 hour time, you can try to by heart the traits only. There is no hard and shortcut rules also. Directly you can try to remember the TDS rate. The remaining all the provisions involving in our CMA final syllabus we discussed. Okay. So then we can close the session and the remaining we can continue from Tuesday. On YouTube only the remaining chapters I will take. First I will take the whatever the chapters I want to complete in this batch only I will take. Then after I can complete the remaining chapters. Okay. Sorry.
Yesterday, share some questions.
Yes.